All right, ladies and gentlemen, we are live. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is Wednesday, 8 p.m. Eastern Standard Time, December 8th, 2021. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so just before we go ahead and dive right into the technical analysis, I just want to talk about the little bounce we kind of saw today in some of these assets. Spoke specifically, what was it? I guess it would have been Sunday, talking about turnaround Tuesdays. That is a thing. It's a real thing in the stock market. Typically if you see selling off on like a Friday, it will continue into Monday. And then what you're looking for is essentially like support and then price action turn around on Tuesday. So we did see that. We have since then gotten, pretty bullish action Tuesday and Wednesday as well. So we're going to pay attention, see what happens. A couple of the indexes, some stocks making all-time highs or at least cycle highs. So looks decent overall. Still a lot of, you could argue there's a lot of headwinds. You could argue there's a lot of tailwinds. It's all, at this point in time, I mean, I don't think much has changed other than Jerome Powell's like hawkish kind of attitude. So what's going on, Comb Concept? Good to see you, my friend. Yeah, buddy, 8 p.m. Eastern Standard Time. Let's get it rolling. So as far as I'm concerned, not much has changed. As far as crypto, not a lot has changed either. We were looking at key levels on Bitcoin and kind of seeing where the market was going to tell us we were going. And we will see that, we've actually had a less bullish response on crypto. On the daily charts in general, Bitcoin and many other cryptos hit their 200 moving average and either didn't bounce at all, broke through them, or are just sitting on top of them. As where we see a lot of these stocks have, well, with the exception of the ones that are down like, 60%, a lot of the like major indexes or sectors bounce the 200 moving average, exponential or simple or both, depending where they kind of lie, and had like a decent little rally off of that. So we need to pay attention to where they're going and, what is likely to happen. So that brings us to Slinky Theory. Truth about Slinky Theory is I was just joking around one day and, basically describing how when we're in a like bearish market or a retracement, how essentially price action acts like a slinky. And, the truth is that's exactly what it acts like. And it's an easy way for us to identify at least a short-term trend. So if you picture, you have a slinky, you carry it up to the top of the stairs, you drop it off the stairs, it goes down the stairs, the back comes up as it goes down the stair, and then it goes down again, and then the back comes up, and then it goes down again, and then it gets to the bottom, you carry it up the stairs again. Or, arguably, you could look at it like this. Slinky goes down a stair, the tail end comes up, but not quite as high as it was when we started. And then the slinky goes down another stair, and then the tail end comes up, but not as high as when we started. And the slinky theory is invalidated, or the downtrend is invalidated, when the rear of the slinky comes higher than the previous stair, because obviously the way gravity works, it's not possible for a slinky to long-term travel, in the upward direction unless you're carrying it. So that's what we pay attention to. That's all Slinky Theory is about. It's basically just identifying a simple way to look at a downtrend, identify that you're in a clear downtrend, and, not be biased by it. And the easiest way to look at a downtrend is if you have lower highs and lower lows consistently, you're in a downtrend until you take out, your previous like low or high, or I'm sorry, not low, because you're still in the downtrend. But if you take out your previous high, so taking a look at the 10-year Treasury, we obviously had an auction today. It was mediocre at best, nothing big. But just looking at the actual yields on the 10-year Treasuries, we see we're still just doing the same thing. We have this March high right here. We have this July low right here, kind of a double bottom, kind of a double top, and we're still trading within that range. So we're still range bound. We came down here and basically started looking like we were going to put in another double top again. Came down and took out that little micro low in between the two tops and then put in a lower low. But the area to watch is actually this area. and you know, we spoke about this, is no surprise. The 1.14 area is the key area to watch. And depending on if you're going by like a daily close, 1.17, something like that. But in the meantime, we're still on top of the 200 exponential and simple. We have reclaimed this area, but the 200 simple is above the 200 exponential. So as far as I'm concerned, still bullish. The trend is weakening, as we do want to see the 200 exponential above the 200 simple when we're in an uptrend. But as of now, we still have positive slope on the 200 exponential and 200 simple. You know, that's bullish to me. We're obviously currently in a, you know, retracement. We have red slope on the TJD, TDMACD, 2 green histograms. So we could potentially be bottoming here, but I don't think it's likely. I think we get further sideways to down price action before we put in a new high, you know, above this little double top right here. We are down in the bearish control zone. It is possible we get continuation to the upside. But overall, if we just zoom out and look at the weekly, nothing has changed here. We're basically still just finding resistance at the 200 exponential. And again, we can see very clear right here until we break down below like that 1.23 level, which is our weekly close. Until we take out that level, or until we break out above either, you know, the pretty much a 200 exponential moving average, so like 1.6, we're basically just consolidating. Overall, though, we have a bullish move to the upside, or, you know, flagpole, and then we're basically just inside of a triangle or inside of a pennant, you know, depending how this forms. But overall, should be a, you know, what would be considered a bullish move. But then when we zoom out again, we have a macro downtrend right here. And then this is just our reaction rally off of the downtrend, and then we're consolidating. So while it's more likely that, you know, we have a bullish pattern consolidating and then we get bullish continuation, we have to remember that all of this move, this whole move right here, is all just a part of the retracement of the downtrend. So we have a very clear downtrend. We have a bullish reaction rally to the upside, consolidation before we expect more of a reaction rally to the upside, but eventually a lower high. And the way we look at that is we just pull up our Fibonacci on the macro. So this is our fib from the top right here to the bottom right here. Same one we've been watching forever. And we will notice if we just turn that off real quick, we came almost all the way up to the 0.5. So this isn't just going to want to stop until it reaches that 0.5. So once we reach 1.83 on the yields for the 10-year, at that point in time, which just so happens, if we turn that off for a second, it lines up perfectly with the 200 simple moving average. So as soon as we reach that level, while I'm not going to just get overly bearish, I will be much more open to the idea of the yields reaction rally having topped out. And that's because there's massive bots and algos, market makers doing the exact same thing we're doing the exact same thing I'm doing. They have the exact same Fibonacci drawn on their chart. They have the exact same everything drawn on their chart or built into their code. They have the same 200 moving averages, and they're literally doing the same thing I'm doing. So until that algorithm gets fulfilled, they're just going to keep grinding until they fulfill it. And sometimes they can't get there, so the price goes down, and then they grind, and then eventually they fulfill it. Now, once we break through that 0.5, though, you know, we're basically going to have this inverted head and shoulders or this cup and handle price action playing out. And then maybe we shoot up to the 618. That'll be our next target at 2.16. Maybe we get the measure move all the way up to the 886. But it's very, very unlikely that we break out of this long-term green downtrend line or take out this previous high right here. And just remember, you know, we're basically in this macro downtrend. And if we look at, before we switch to the monthly, we have a hard sell signal and the cross to the downside on the stochastics. We have a retest of the slope line. Let me zoom in on this. This happens all the time. We talk about it all the time. We're in a downtrend. We're in an uptrend. We have blue slope line. We're breaking down to it. We find some kind of temporary support, break through it, come back up, try to reclaim the slope line, try to reclaim the trend, and that fails. Oftentimes we'll get bearish divergence, and then we go into a longer term downtrend. So here we have an uptrend, blue slope line, nice powerful move to the upside. We're coming down, bunch of red histograms, looking bearish, attempt to come back up, save the trend. Now it's flipping over red, acting as resistance. We didn't even make it up to it. So now it looks like we're going to get a longer downtrend, consolidation, or sell-off. So at this point in time, the weekly chart looks pretty bearish, and then if we just zoom out to our monthly chart and just look at the big picture here, you know, what is going on right here? Well, we have from the 1980s, 1981, Treasury yields topped out. And we've been in a very clear downtrend since then. So ignoring this red line up here, we're not going to pay attention to that right now. We're just going to look at the little green channel that we're operating inside of. We can see that every time we hit the bottom of the channel, we bounce it perfectly. Ignore the blue line as well. Every time we hit the top of the channel, we bounce it perfectly. So the most likely thing to happen is that we're going to come up to the top of the range and bounce that, or come down to the bottom range and bounce that. Well, the bottom of the range is negative at this point in time. So the likelihood of us ever touching that again, pretty much impossible. So the truth is, this can basically sit around at zero, or it can go up. But that's pretty much it. So here's our Slinky Theory in full effect. I'm going to turn off the drawing tools for a second. This is Slinky Theory if I've ever seen it, okay? Giant stairway. You know, we let the Slinky go at the beginning. The tail end pops back up, and then it goes down another stair. Tail end pops back up. It goes down another stair. Tail end pops up. Down another stair. Tail end pops up. Down another stair. Down another stair. Down another stair. Down another stair. Now we're basically at the bottom. Tail end pops up one more time. Takes out that previous high. So we basically have a double bottom, and then we take out that previous high. Looks like the beginning of an uptrend. Psychs people out, you know, but in all actuality, you know, that was November 2018. And then we capitulate to a new low. Happens a lot of times. Fakes out the market. People get bullish on something, and then they're wrong. Takes out the low. You know, it's basically a throw over to the upside, and then a spring to the downside. And then oftentimes, the next retest of that level, once we reclaim support right here, the next retest will take out that previous high, and then we'll start paying attention to our highs before that. And typically, that is the bottom of a market, or at least results in some kind of uptrend. So that's what we're paying attention to. Seems very likely to me, since we're basically at zero, or, you know, we're at zero. So it seems less likely that we're going to go negative on, like, at least this chart, because it's not actually possible. And then also, just for the drawing tools, when we have this off of log scale, just on normal scale, we'll see this green channel reacts like beautifully. When we turn it on log scale, obviously the green channel is very distorted. And then you see the channels that I've been using for some time, with the red resistance at the top and the blue support. And it kind of gives us like a little bit more of like this realistic, like kind of broadening level. So that's what I'm paying attention to. And then we can start looking at, you know, our moves to the upside, the heart line, all that good stuff. But essentially, it's just two ways to look at the same chart. So it doesn't matter how you're looking at it. In my opinion, should be looking at it on log scale. But there's no reason not to look at it both ways, especially because most Wall Street people or analysts are going to be looking at it, you know, the old school way. And the old school way is like traditional, not log scale. So, but at this point in time, you know, when we look at this, kind of turn off some of the noise here and see what's going on. We had a macro downtrend. We had the 821. We had the retest of the 200 exponential and simple get rejected right here. We came down basically to zero. We have crossed the 8 and 21 back to the upside on the monthly. We're saving that trend. So it looks like on the monthly, we want to have further upside. We have a bunch of green histograms. We're back above the slope line. We're above the zero line. We're basically testing the bullish control zone, running into some resistance on the stochastics. But at this point in time, this looks like the beginning of what's going to result in a decent little uptrend here. So at some point in time, you know, and that lines up a little bit with like the fundamental analysis, etc., and kind of gives us that target up here to retest the 200 exponential and simple somewhere around like, you know, 2.6 or something like that. So, so while the shorter time frames don't look particularly great on the 10-year, you know, they don't look terrible. The daily and the monthly look bullish. The weekly looks bearish. So we basically have our short time frame and our long time frame looking pretty good overall, but mid time frame not so much. So on a daily or weekly time frame rather, what are we talking about? I mean, we could be talking about months of a bond rally while yields sell off. But as long as nothing changes on the macro picture, you know, when we look at the monthly chart, we could potentially be looking at a move that plays out over the next, you know, year, 3 years, 5 years, who knows? So TLT obviously got a nice push to the upside, took out that key level right here. This is our 20-year treasury, put in a new high, reclaimed the 200 exponential and simple, slope angle to the upside. Overall looks good. Overall looks good on the daily. So how could we possibly have two charts that should show essentially the opposite thing, both looking bullish on the daily. Well, this is the 20-year Treasury bond. The other is the 10-year Treasury yield. So why are they telling us different things? Well, because we're starting to see the flattening of the curve, or, you know, what amounts to yield curve inversion, you know, potentially playing out. And it has already played out like in Europe. So I mean, there's quite a bit going on there. I don't even know. That looks like a scammer over there. Sandra Fisher, are you a real person? Uh, I can't tell what you're trying to say, but looks like a bot scammer comment to me. Comb Concept says, what platforms do you use to trade stocks and crypto? I mean, I have a bunch of different. You're talking about like what exchange or brokerage do I use? I mean, I have a few brokerage accounts. I have a bunch of crypto accounts, but I'm located in the United States, so we are pretty limited. I'm not sure where you're at or anything, but yeah. So while we're seeing this taking place, essentially, yeah, okay. The bots and the scammers are here. I mean, pretty much, I can like almost already know. Because if your name is that of a female and you're like in one of my crypto streams or commenting on my video, you're pretty much a bot or a scammer. So like 95% accuracy. So like, why don't they just make guy names and not put attractive pictures? Like it'd be so much more confusing. I'd be like, oh, this isn't automatically a scammer because it's a guy. Yeah, good try though. But anyway, please don't click on any random links or like any scam comments or whatever. You know, I go through and delete them all. That's why you don't see them on my videos. But so essentially, we're seeing in Europe already. We talked about this specifically. What was it? Czech Republic and Russia already had the yield curve invert. We're seeing flattening of the yield curve. Still plenty of countries before the United States yield curve flattens / inverts. But it has resulted in a recession like 100% of the time. So likelihood of a quote-unquote double dip or another recession seems extremely, extremely likely at this point in time. So let's look at the VIX now. Obviously been paying attention to this for some time. We know the red area is obviously like the danger zone. You know, the green area at the bottom, kind of off the screen, is obviously like, you know, the area to longness on the macro. And then inside of that channel, we have this descending channel since the CVD dump right here. You know, obviously the volatility here, the higher the volatility, probably the more selling is taking place in the actual stock market. So when we broke out of this descending channel right here, you know, we nearly hit the measured move. But we have broken all the way back down. We're back down at 200 exponential and simple. We're back down at the heart line of the channel. So essentially at this point in time, you know, this move is done. Typically what we see with the VIX is we see a big aggressive move and then a sell back off, aggressive move, sell back off. Sometimes we'll see another spike afterwards. You know, we did break out of the channel technically. We did hit the majority of the measured move technically. But at this point in time, this is a failed breakout to me. You know, if we had seen it consolidate right here and then more selling come in and this had burst back to the upside, it would tell me there's probably going to see like continuation in selling, etc. But that's not what we're seeing. We're seeing the hard sell on the stochastics. Looks like this is out of juice for right now. Would not surprise me to see this come all the way back down to like the 15 level and just our slow, steady kind of just melt up to continue. So oil. Oil obviously sold off all the way back down to our key support level. Hit the 886. You know, hit our target. I mean, what did I say? Low 60s. You know, we came down to technically what, 62.50 US oil. I would say that is low 60s. And again, we have our low right here and we put in a slightly higher low. So we were able to save the uptrend. We had our high right here and we put in a slightly higher high right here. So again, uptrend still in full effect. We'll talk about the divergence on longer time frame shortly. We do see a hard sell signal come out of the bullish control zone, but we did not actually exit the bullish control zone. So while the blue Stoch is underneath the pink Stoch, we could very easily see continuation to the upside right here. So until we exit the bullish control zone, it's not over yet, ladies and gentlemen. And we do see all green histograms, blue slope line, and a couple red histograms kind of showing up now. 821 have crossed back to the upside. Looks more likely than not that we're going to get that reversion to the mean. So I would expect a target of like 75 to 77.60. 75.50 to 77.60 seems extremely likely at this point in time. And then once we get to that level, we'll pay attention to what's going on. You know, are we able to reclaim that level? Do we get rejected right here and start to sell back off? That's when we can really pay attention to what's going on. Oops, and we're randomly on the 4 hour. Sorry about that. Oh, probably because of that. All right, so if we look at the actual daily chart, that might help. If we look at the actual daily chart, we'll see we basically came back down. We had the 200 exponential and simple retest. We put in a slightly higher low right here. But we do have 1, 2, 3 peaks on the highs. And that was our weekly triple bearish divergence, as each of these peaks is higher. But we see on our indicator oscillators that each of the peaks is lower than the previous one. Well, on some of them, not on obviously this one right here. So we saw like a decent amount of bearish divergence taking place. We had a pretty heavy sell-off. If we reclaim the 821 and this crosses back up green again, I would expect continuation to the upside. Coming out of the bearish control zone, hard buy signal, bunch of green histograms. Looks like we basically bottomed. I mean, our target level was all but hit. I mean, we were essentially expecting to hit this breakout line here in red and to act as support. We came back down, you know, basically like almost touched the top of the box, you know, high 50s, low 60s, 62. That's pretty solid. So as far as I'm concerned, this is probably done selling off for now. But the key area we'll be watching is, you know, the resistance up here at like 78. But we'll see what happens there. I mean, and, you know, we could easily see some chop and come back down to like 66.60, then move back up to 78. I'm overall still macro bullish on oil. And if you don't know why, we'll skip the, you know what? No. I'm going to go the weekly so we can show off that divergence. That was on the daily. Here we see on the weekly, 1, 2, 3 drives, 1, 2, 3 drives, all lower, 1, 2, 3 drives, all lower. And now we lost the red slope line. So we're seeing that bearish divergence playing out on the weekly. And also, if we do not reclaim 74.22, which it looks like we probably will over the next couple of days, but we're going to get the cross to the downside on the 821. And we had it happen for a couple minutes right here, October, basically like 2020. But the whole way up, we've been able to keep this 821 cross to the upside, this green uptrend. So if we see this cross back down, we probably do come back down here, revisit the lows, and then eventually come back down and touch the 200 exponential and simple. So we see, you know what, the high 50s that we're really looking for. Hard sell signal, triple bearish divergence. I don't think this move is done to the downside. We could very easily get more price action to the upside, but I don't think this triple weekly divergence is done playing out just yet. Not yet. And then if we just look at our monthly chart, bear with me, this is like the hardest chart to actually look at just because we have that crazy wick, so it messes everything up. But essentially what we're paying attention to is, you know, we basically crossed into a bear market below the 200 exponential, below the 200 simple, you know, back in 2014. Our all-time high was back in 2008. And then, you know, basically we're like confirming essentially a macro bear market on the monthly on oil. And then all of a sudden we got this powerful burst back to the upside, took out that previous high right here, reclaimed the 200 exponential and simple. What does that tell us? Well, if we just consolidate around this range, which we're most likely going to do, just consolidate around here, until we break down below 60, you know, we're probably going to operate somewhere between like 60 and 75 for a bit. And then we're probably going to see continuation to the upside. I really do think we're coming up to $100 to retest it and probably higher. We're still inside the bullish control zone. It does look like on the monthly it wants to cross the downside and potentially exit the bullish control zone. But I think this will be a false signal. I think maybe they'll cross right here. It'll bounce the 80 zone and we'll see like consolidation around in this area. I don't think it's ready to break down just yet. We see one red histogram, another one coming. It is possible. I think we're more likely just going to consolidate. I don't think we'll close a monthly under $60. If we do, that's a big change for me. But more than likely, we'll close our next monthly above like 72 and just kind of hang around. And then we're going to go into a macro uptrend on oil, for the first time in a while. We see basically it topped out back here in the 1980s, had a massive sell-off, retested the highs, and then just kind of chopped around for like a decade. From 87 to like, basically 2000. And then had a breakout from that level, put a new all-time high, massive sell-off, retested the highs, basically retest the lows, kind of chopping around here. And it looks like it's ready to basically go into, another decade-long uptrend. It's possible it does not happen and this breaks back down and, nuclear fission takes over and Cathie Wood is right. But let's be real, she's never right. So oil is telling us a different story. And the lack of, investment in the space, the lack of foresight, it's the same as the trucking crisis. We were talking about it one day. Everybody's been selling, all these oil producers, all these oil companies, hey, we want dividends, don't reinvest in oil, oil's dying, everybody wants clean energy, so they don't reinvest in oil, they don't do any of this stuff, we close down pipelines, we create a green agenda, and then all of a sudden we have problems with oil, energy prices going up, there's all these issues, we have the Texas issue where everybody's losing power, prices going through the roof, we have, what's going on in England, with nat gas prices going through the roof. And then all of a sudden everybody starts reevaluating all this green energy like bullshit. Like, oh, wait, is this even viable? Are we going to be able to live off of solar? Hang on a minute. And then you like wake back up to reality and realize before you can stop using your legs, you have to find an alternative form of transportation. You don't just chop off your legs and say, I'm not going to walk anymore, because one day I'm going to have robot legs. You wait until you have robot legs and then you can use them. You don't just chop off your legs right now, anticipating the future you'll have robot legs. That's like what we're trying to do with the oil industry. It doesn't make any sense. It's stupid. You solve the problem first and then let it take over. You don't just chop off your legs and then say, okay, we don't need those anymore because one day we'll have robot legs. No, doesn't work like that. And, that's what we saw with the trucking crisis. For the last decade, there was that whole learn to code movement. And it was like, oh, truckers, one of the best jobs that you can have in the entire United States. And, in a couple of years, we won't need truckers anymore because everything's going to be automated. There's going to be autonomous trucks and EVs, and they're going to drive around. And all you truckers that are making six figures, you're going to lose your jobs. You're going to have nowhere to go, and you're screwed. So you better learn to code. And that was a whole big thing 5-10 years ago. And now here we are a decade later. We're not even remotely close to autonomous trucks, not even close to autonomous trucks. And now people have stopped going into that industry over the last 10 years because it was declared dead, by the media, by the markets, by the governments, by whoever. Oh, we're not going to need truckers anymore. Truckers are garbage. Don't go into trucking. Trucking's useless. And now here we are with the massive trucker crisis and no one to fill those jobs. An aging trucker population. It's one of the best jobs that you can get for a young to middle-aged man with limited education and limited costs right out of high school or college or trucker school or whatever. And there's nobody to work those jobs. Why not? Because people are wrong. They got ahead of themselves. They got ahead of their skis. And that's exactly what is happening in the energy space. Exactly what is happening. People believe this BS because somebody who they thought was smarter than them told them this is the agenda, this is the future, this is what's going to happen. And then everybody bets on that. Everybody gets on the wrong side of the trade. And then it comes back to kick them in the ass. Same thing with college. All these idiot people going to college, learning about underwater basket weaving and, non-cisgender studies or whatever all this crap is. That's fine. You can do whatever you want. But don't get mad at everybody else when you can't get a job doing these things because there's no jobs doing these things. When in all reality, you could have went to a trade school, learned how to be a plumber, learned how to be an electrician, learned how to do a bunch of different things with your hands, had almost no debt, a machinist, engineer, engineer, I guess technically lots of schooling in debt, but a actual machine shop, somewhere you get an apprenticeship, have minimal debt, work for a couple of years, make pretty decent money, and then all of a sudden start your own business or, work with whoever you're apprenticing under and make six figures with no debt right out of school, versus the person who goes to school for a few years, makes no money while they're in school, takes out hundreds of thousands of dollars in debt, and then gets out of school and can't get a decent job. So the market, the agenda was push everybody into college because we got to get smarter, we got to get degrees, and who cares what your degree's in, as long as you get a degree, it shows responsibility, and somebody out there is going to pay you the money you want for doing that. Well, that's not realistic. And we're seeing it backfire in the face of all these idiot people right now. They have no actual skills. They have no real life experience, and they're lazy as hell. None of them want to work, and they just want free handouts, and they're mad because they have hundreds of thousands of dollars in student loans, and nobody wants to hire them because they don't have any skills. They're not useful. They have no people skills. They have no functioning life skills, and they basically were just brainwashed by colleges, which have some woke agenda that frankly people are tired of. And I'm not trying to get overly political, but my point is that when people try to anticipate the market and buy some BS agenda that gets pushed by the politicians or the media or whatever, oftentimes that agenda is wrong. It's the same as what's going on right now with the Fed. I hate the Fed. I think they're terrible. It's one of the worst things, not just the Federal Reserve, but central banks in general. I hate them. I cannot stand them. Okay, but the fact of the matter is, they're not actually what caused the problem that's causing the problem right now. Everybody's blaming them for all this money printing or whatever. It wasn't the Fed. The Fed did not cause the problem. The big V did not cause the problem. The sickness, it did not cause the problem. What caused the actual problem is easy. Government policy. Government policy caused all the problems we're having right now. Government policy, they got scared because they're old and powerful, and they said, we're just going to shut down the economy. We're going to send everybody home. We're going to keep everybody safe. And then we'll just start the economy back up later. But in the meantime, we're not going to be able to manufacture stuff. So we got to give, people are going to lose jobs. Markets are going to crash. So we'll inflate all those things back up. We'll give people money. We'll stop employers from firing people. We'll just fake it till we make it. And now we're having all these issues because the central planners can't plan ahead functionally because the market is smarter than they are. So every time they try to fix something, something else breaks. And that's exactly what's going on right now. But the Fed is just a Band-Aid. The Fed is one of two Band-Aids, okay? The Fed and the Treasury. So we have fiscal and monetary policy. And when we caused all these problems, we had to put Band-Aids, temporary fixes over them. But eventually, if we don't fix the actual problems, it's never going to go back to normal. We're never going to have a functioning economy again. So make sure you understand what the problem is and then fix it. Don't just believe the narrative that everyone's telling you. Oh, okay, there's inflation because the Fed printed a bunch of money and now everything's more expensive and it's all their fault. It's not, though. We wouldn't even need the Fed to do anything if it wasn't for trash bag governments, basically pushing their agenda. And why were they pushing their agenda? Well, they got scared. Were they scared because they were guilty, because they were complicit in the creation of this? Maybe. Speculation. Were they afraid because they're old? They're old as fuck, and they were the ones who were probably going to die from this? Maybe. Speculation. Are they scared because they thought it was going to be way worse than it was, and they really just love the population and want to protect them? Maybe. Definitely speculation. But the fact of the matter is, they caused this. Whether it was intentional, whether it was not intentional, none of that matters. What their reasoning was, whatever, none of that matters. The fact of the matter is, they caused this. Because now, in hindsight, looking back, imagine they didn't shut anything down. Imagine the governments did not freak out. Imagine this just spread the world over, which it did anyway, and just spread around. Maybe hospitals got a little bit too busy. Maybe a couple extra people, exited the world before they normally would have. Sure, it's unfortunate. Would the world be better off now for it? Maybe. I don't know. I mean, speculation. We don't know. But the fact of the matter is, the supply chain, the economy, the debt of all these countries, the, status of the entire world would be in probably a much better shape. Because in the end, everybody ended up getting the thing anyway. The people who are going to die probably died anyway. So again, I'm not a doctor. I'm not a scientist. I'm not a politician. But, in hindsight's 2020. But if you ask me my honest opinion, in two different worlds, one where we did what we did, and here we are now, and in the other world, we just let everything keep going, and people could go to work if they wanted. They'd quit their job if they wanted to, whatever, if they were scared. The media didn't push this like scary, oh my God, everybody's going to die thing. And we just went about our business normally, and we treated this like, say, for instance, a bad flu or something like that. Would the world be in a better place right now? Sure, I honestly think it would be. Maybe we would have more deaths up front, but now we would have natural immunity. I don't know. Maybe we would have a completely different situation. Who knows? I mean, there's, hindsight's 2020. We can sit here and theorize about it as much as we want. But the fact of the matter is, this was not caused by the Federal Reserve. This was not caused by the Rona. This was caused by government policy. What is their agenda? Why did they do this? We don't know. But that is an absolute fact. So that's what's so important to pay attention to. So as much as I hate the Fed and I hate what they're doing right now, they are actually just part of the solution and not the fix, but, the Band-Aid. So let's keep on TA here. So we got the Dow Jones, obviously put in our top, beginning of November, came back down, touched that same support line again in red, the target area, just like it did the previous time, touched the 200 exponential, the 200 simple, and that red support line. And now here we are back above the 821 reaction rally. So what we need to pay attention to is this going to full on go into Slinky Theory, where we have a high, then we have a low, then we have a lower high, then we have a lower low? Or are we just going to do what we've been doing, where we have a high, then a low, which is higher than the previous low, and then another new high, and then another higher low? So as far as I'm concerned right now, still an uptrend. Everything is nice and healthy until we break down below and start closing below this previous low right here. Everything looks fine. So obviously we want to see this take out the high. If it doesn't take out the high and then we take out the low right here, then it's going to start looking sketch, and the likelihood of a Santa Claus rally or year-end rally is extremely unlikely. But as of now, still looks fine. Uptrend still intact. Let's look at our weekly chart. Obviously still have 1 drive, 2 drive, 3 drives of bearish divergence. 1 drive, 2 drive, 3 drives of bearish divergence. Below the slope line, it is red. 3 drives of bearish divergence on the stochastics as well. We have pushed back up and saved the 821 from crossing to the downside so far. We have seen this happen once already. We broke down and reclaimed it. We saw it happen here, consolidated and reclaimed it. And now here we're seeing it happen again. This is the trend weakening. The trend is slowly just weakening. We're starting to roll over. And now we're putting in triple bearish divergence on the weekly at the top of the trend. So we need to be very, very careful here. And it's pretty obvious to everyone that we're not in some powerful, full-on parabolic uptrend in any of these markets right now. There's a couple stocks that are doing it. There's a couple cryptos that are doing it. But overall, the markets are not, and the economy is not in great condition. We're at all-time highs. We're close to all-time highs. Sure, we can pull out some numbers that make things look good. Sure. But in all reality, are things great right now? They're really not. They're really not. Technicals are not great. Fundamentals are not great for any of these things. So we keep that in mind. S&P, same thing. We're back up here retesting the highs. This had a much more powerful bounce. But, when we go over to our longer time frames, it's the same exact thing again. Turn off our drawing tools. We basically see 1 drive, 2 drives, 3 drives each time higher. And then we see kind of a clusterfuck right here, but bearish divergence taking place. And then again, we have 1 drive, 2 drive, 3 drive. And what does this look like? Well, this looks like our rejection off of the red slope line. So we have technically started to confirm that this is topping out. It can still put in new all-time highs, but we're at the levels where it's starting to look like it wants to roll over. Again, we have bounced to 21 and save the trend on the weekly. But the more times we test it, the more likely it is to break. So not, in my opinion, not the time to just be like, dumping a bunch of money into the markets recklessly. But again, that's my opinion. It's not financial advice. I'm not your financial advisor. IXIC, NASDAQ, getting a nice little bounce up here. Didn't quite make it to our buy zone. Kind of front run it. But, that's not a problem. We obviously have a pretty clear kind of support line developing here as well. Something like this. You could kind of draw it a couple different ways based on candle wicks, closes, whatever. But essentially we have something like this. And we're just kind of bouncing that. We hit the measure move of the breakout of our ascending triangle already. We came back down after the breakout, retested it as support, put in a new high since then. Overall looks bullish. Overall looks bullish. I mean, we're starting to see a little weakness. Came down to the bearish control zone on the daily. Slope line flipping over red. But honestly, does not look bad. We do see here again though, triple bearish divergence on the weekly, 1, 2, 3 drives, 1, 2, 3 drives. So at some point in time, we already lost the blue slope line. So now we have this green slope line we're paying attention to. Eventually we're going to lose that slope line. When we do, we expect this area to act as support. And then if we lose that, then we're going to start looking for like the reversion to the mean, the pullback to like the 200 exponential and simple. And we will pull back to it eventually. We will touch that 200 exponential and simple. It looks like we're not going to, but how many times do we touch it? We touched it in 2010. We touched it in 2011. We touched it in 2016. We touched it in 2018. We touched it in 2020. So how many different times was there bunches and bunches of stuff going on? It's like, no, we're never going to pull back. This market's bullish, blah, 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 blah. We're the furthest we've ever been away from the 200 exponential and simple. So we're more likely than we've ever been to come back down here and touch it. So if our last touch was in 2020, maybe it happens in 2022. Maybe we got another month or whatever, and then we consolidate. Maybe we put it in a higher high. Who knows? But eventually we're coming back down here. Now, these are going to continue moving to the upside until then. Maybe we just touch a 200 exponential. Maybe we front run it slightly. Maybe we overshoot it slightly. Who knows? But the likelihood is that the NASDAQ comes back down to 10,000, which is a 40% dump. More than that. We're at 1578 right now. So, when is that going to happen? Who knows? I would just guess 2022. Sometime in 2022, I think we put in, a 40 to 60% pullback. No, that'll never happen. You're crazy. Blah, 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 blah. Sure. Okay. Who was the guy who called the massive CVD dump right before it happened? Like literally within less than 1%. This guy. And I'm pointing 2 thumbs at myself while I say that. Oh, that's tasty. Next we have the Russell. So the Russell did exactly what we said. Came back down to the bottom of the range again. So, still just completely range bound. We had this throwover. We had this failed breakout. Came back down to the bottom of the range. We're back in the middle of the range. Just consolidating. About to get a hard buy signal and the exit of the bullish, bearish control zone. Looks good. Looks so good. It's probably going to come back up to the top of the range and then consolidate again. Who knows after that? Eventually it will break in one direction or the other. But, it's doing nothing. Still doing nothing. XLE Energy, retesting the top of the range. Came down to our blue box area perfectly. Retested our horizontal support absolutely beautifully. We got the buy, sell, buy signal. That is our divergence signal. Same way we got the sell, buy, sell signal. Same way we got the buy, sell, buy right here. This has been playing out beautifully. I do think, this chart is ugly, so you got to bear with me on this one. But I do think we're still in the process of what amounts to this 5-wave structure. The more times we touch this top area right here that we're consolidating at, the more likely we are to break. And when we do break, I think it's going to take us all the way up here to the 886 of the macro all-time high, which is like $74. So, and wait a minute, energy, really? Why would energy be going up in price? Why would be the worst sector, the lowest underperformer, the one sector that has not put in new all-time highs, do well here? Meanwhile, everything's about energy right now. It just seems obvious. I know it does, but here we have a 1, a 2, a 3, a 4, retest at the top of the 1, and then it looks like we're going to get continuation to the upside. So still have a macro target in place for that 45% move, breakout taking us up to like roughly like 74. And where does that come from? Well, if we just zoom out and look at the big picture, this was our all-time high. All-time high in 2014, all-time low in 2020. Fib from the top to the bottom. And then we see the first bounce, the 1, was at the 0.5 here in orange. You might not be able to see that. Let me make that a little brighter. Just kind of move it out a little bit there. There we go. So the initial bounce, we came back up to the 50% retracement. So we retraced 50% of the move down. That was a bullish move after a bearish dump. Come all the way back down here, find support, come all the way up, hit the 618 next. So we hit the 0.5, overshot the 236, then we hit the 618, then we come back down to the 0.5, and now here we are back at the 618. So the next reasonable thing is if this is bullish, it goes to the 786. So it goes from the 0.5 to the 618 to the 786. Well, that makes sense, right? And the next reasonable thing, if it's bearish, it goes down to the next level. So if the first time it overshot the 236, then went up high, then it came back down to the 0.5, then it went up high. If we break through the 0.5, it's probably going to come back down to the 382. So a bearish target would be like $40. A bullish target would be like $74. But it looks bullish to me right now. The more times we punch the drywall, the more times we hit a head on the ceiling, the more likely we are to break through it. And I constantly hear people saying all the time, we keep hitting this resistance, we keep hitting this resistance, we can't break through it, it's going to capitulate. No, it's the opposite. Every time we hit the resistance gets weaker. Every time we hit support, the support gets weaker because we're chewing through those orders. If you think of resistance, there's a bunch of people with sell orders in the books. Say the first time when we hit it, there's, $1 million worth of sell orders in the books. And then we come back down, recoup, come back up, and now after we hit it, maybe a quarter of those are gone. So now there's 750,000 in sell orders. Then we chop around here for a while and we chew through the sell orders, and now there's only 250,000. And we come back up to it again, and then there's 100,000, and then there's 10,000, and then boom, we shoot to the upside. And that's how you have to think about resistance and support. Think about it as a static sell is resistance, a static buy is support. And the more times we hit those static numbers, the more times we chew through it. It's like super breakout. The ball hits the bricks, it starts knocking away the bricks, and then eventually, once all the bricks are gone, the ball can continue in the direction that it was moving in. So that is XLE. Again, still looks very bullish to me. Could easily consolidate around here, but still looks very bullish to me. And massive underperformer. I mean, it's done good this year, but oh my gosh, really? The bots are out here tonight, ladies and gentlemen. Oh, look, it had a girl's name. That's so weird. A female bot in the crypto space. So we know there's no actual women in the crypto space. And not on this channel. They're all on the Doge channel or the Shib channel. They're all looking at Shiba Inu, trying to figure out, why it hasn't quadrupled yet, why they can't retire. They're spending their child tax credits on Shiba Inu coin. XLB, no offense to any women out there. I mean, there's plenty of smart investing women, etc. I'm just joking from my own real life experience. With wine moms buying Shib at their PTA meetings. XLB. Material sector, still just, we had a bullish breakout of a bearish pattern. Broke out, retested the top of the pattern as support. So we had a very clear resistance. Broke out from that resistance, found support. This looks very likely to see continuation to the upside. We still have a little ways to go on our measure move, and the target up here at like $94 seems likely. That's our material sector. XLI, industrial, still just range bound. We have this channel. We've basically just been operating inside this channel forever, just flattening out, doing nothing, and we're still inside that channel. Until we start confirming above like 107, 108, consolidating up there, or until we start breaking down below, like let's say 98, this is just range bound. This is like, it's basically the Russell. This is just this is the Russell chart right here. Did the exact same thing. We consolidated forever. It breaks out the top. It fails to break out, comes all the way back down to the bottom, bounces back up to the top. So you could literally just change this from XLI to Ruddy. And the more time you spend in these markets and looking at charts and looking at assets or whatever, you could turn the name of the ticker off. It doesn't even matter anymore because you're like, oh, I've seen this before 1,000 times. I've seen this 1,000,000 times. This looks exactly like this. And sometimes one of those will break out, and then we get an idea what the other one's going to do. Maybe we've seen this play out 100 times already, or 1,000 times, or 1,000,000 times. So we can expect with a high chance of probability or success or some sort of edge on the market, this is more likely going to break to the upside. This is more likely going to break to the downside. And that's our edge, based on experience, based on momentum, based on whatever indicator, oscillator, moving average, whatever it is. And that's all we're looking for. And that's why so many times we see these charts looking similar, and we see those moves playing out over and over again. I'll be talking about reversion to the mean, retest of 200 exponential and simple moving average. And then we see it happening over and over and over and over. And that's why trading is so important. We can switch between these different assets and take advantage of those moves. So one thing pops off and then it just sits around for a week. We got to find the next one that's going to pop off. We position ourselves ahead of time. The move happens. Everybody else FOMOs in. They buy our bags. We're out. We're on to the next. On to the next. On to the next. XLY. Consumer discretionary. So we kind of broke down from what looked like a little like double top action right here. Put in a lower low. So we don't like that, but we have reclaimed it. So now again, we got to see, do we put in a higher high right here? Or do we put in a lower high? And then if we put in a lower high, do we take down this low right here? Because this could be the beginning of like a daily downtrend. Looks like it. We do have some clear bearish divergence taking place. 2 lower points, 2 higher points. So let's see what this next one does. Consumer discretionary though, doesn't look particularly great. Already hit the measure move of our breakout. This one is just kind of like sit on the sidelines for now. XLP, consumer staples, retesting those highs again. Still have a little bit left for our measure move. Bouncing the 200 exponential and simple perfectly. Bouncing the heart line perfectly. Hard buy signal. Retesting the highs. This looks like it wants to break up and complete the measure move, which our completed measure move is, I mean, it's just above our heads. Somewhere around like 74, 75. Seems likely. Seems very likely that we will get there in the near future. XLV, healthcare. Healthcare, we have a high, we have a lower high. We're trying to break through that lower high. If we do, we'll probably come back up to like 137 and then new highs. Hard buy signal. This looks pretty good to me. We do see a little bit of divergence taking place between these points. Nothing too crazy. This to me just looks like a big old triangle, and it looks like we're potentially getting ready to break out of this. So if we take the high right here and we draw it to the next high right there, that's our resistance. You know, when we get back up to that, that's what we have to pay attention to. We have a couple different levels all kind of here at the same spot. So when we break through this, you know, right here, if we start breaking through this, right above our head, we have this. So again, you know, the more things that we have lining up, the more likely those things are to be, you know, key points of contention. So we basically have an area between 134 and like 135 and a half. Once we start breaking and confirming above those on the daily, you know, where's our next level that we're paying attention to? Well, again, you know, it's a couple more dollars above our head. Then it's at 137. And then after that, I mean, it's blue sky breakout. Clear sailing after that. So, you know, we basically have just a little bit of chop right above our head that we're paying attention to. And then as far as support, you know, we're putting in consistent higher lows. Overall, you know, this is basically just a flag. So I would expect eventually we consolidate, maybe even come back down here to the bottom of the range, consolidate, and then break out to the upside, new all-time highs. Probability would have it that this thing just rips to the upside eventually. But again, could easily have a little consolidation still before it breaks. Excuse me. XLF, financial. Looks okay. I mean, this is a key little support right here from a bunch of tops. We were able to reclaim that level. 821 looked like they're trying to cross back up. Momentum picking up here. Looks like we want to flip the slope back over. Hard buy signal. This looks okay. I think it's coming back up to retest highs. I really would like not to be a stickler. You know, and I don't always have to be right. Not always. I mean, I prefer to always be right. 100% of the time. But that's just not realistic. But the fact of the matter is, you know, we basically topped out slightly above the 1.5 and did not quite hit my target, which was the 1.618. So while we did hit the red box area, while we did technically fulfill the move and hit my target, I really want to see this come up here to the 1.618. I really want to see this come up here and tag perfectly 4105. And then I can just, you know, wash my hands of this and say I was right. It played out perfectly. And not just because I want to say I was right, but because that's like the bots and the algos not quite being able to realize their target, consolidating, and then using that momentum to push back up to the target so that the bots and the algos are happy. And, you know, that's all that really matters. It's not about my opinion or about me being right. It's just about what the market likes to do. So I think there's a very high likelihood this shoots back up to like 41 in the near future. I mean, but that's not even a 10% move. So there's really nothing here. I mean, overshot could, maybe it goes to 2.618 and then it's like, oh, I should have took that trade. But hindsight's 2020. So financials looks like it's putting in a new high. XLK Tech, new all-time high close. Left a little gap behind. Got like no pullback right here. Makes sense when you consider the narrative. Oh, everything's going to lock down again. We're going to be locked up. There's danger. Another variant. You know, the Transformers are coming. The Decepticons are going to attack us. The world's going to come to an end. We need more of this. We need more of that. Oh, please, government, help us. Sure. So it's like, oh, let's just do what we know. Bots and algos stepping back in. Lockdowns are coming. So what performs well? Tech stocks, et cetera, et cetera. But the fact of the matter is, there's too many headwinds on the tech sector right now. Too many headwinds. Because if rates start to rise, you know, if Jerome the Hawk starts just tearing doves apart, swooping them out of the air, biting their heads off, just murdering doves left and right, which I think he's the doviest dove, so technically he would have to take his own life. But it's not going to be good for tech. So I'd be real, real careful here. Looks okay, though. You know, looks okay. I mean, all-time highs, sure. Keeps just melting up, I'm sure. But would I rather be in the tech sector in general or just the high flyers? You guys know how I feel. I'd rather just straight up bet on the winner than, you know, bet on like the top 3 horses, if that makes sense, or the top 10 horses, or, you know, a basket of horses. Just pick the winner. There's a reason it's a winner. And typically, you know, with technology and everything going on here, especially on like a short to midterm basis, the winners tend to keep winning. I mean, that's all there is to it. With stocks, with athletes, with cryptos, whatever. It's all the same. When people are winning, they're winning for a reason. They usually keep winning. And then that draws more talent, more skill, you know, whatever. And then you keep winning, keep getting better. And widens the gap between them and everyone else. You know, and that's a strong argument for Tesla, you know, without even meaning to. XLC communication looks terrible. Worst chart we've probably looked at today. Broke down below 200 exponential, flattening the 200 simple. This thing looks like it's ready to enter a bear market. Hard buy signal coming out of the bearish control zone. It's going to try to push back up here, but honestly, there's a lot of resistance overhead. You know, this is the area to look. $80. This thing's got to get above $80 and start closing back up here. If it doesn't, it's going to see some serious downside. You know, this had broke down from a very key support here in green and then consolidated on this yellow line. So this is, okay, I talk about this all the time, the parabolic curve. It's been a while since I've discussed this, and I have a lot of new people on the channel, so let's talk about the parabolic curve for a little bit. You know, when we first start, let's just draw one more like parabola in here, and then we can kind of get a better idea what I'm talking about. So here we have this blue line out of the dump, out of the bottom, okay? And we hit the line, hit the line, hit the line, consolidate, 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 slowly just melting up, and then we break down. And then we find support between this previous low and this low, and then this low, and then we just start. And now what is this? Why is this a parabola? Because initially we have a very strong slope, then we still have an upward slope, but it's less strong. So now we have the blue slope, and then we consolidate on the green slope and slowly just grind higher. And now here we broke down from that one again, and now we have this yellow support, and it's just flat. It's just to maintain, just going sideways. And then we break down from that again, and now we have to pay attention to the reverse of that parabola, which is essentially like parabolic resistance. Previously, we had parabolic support, and that was very important because it was basically just propping up price and keep moving it to the upside. Now we have potentially a parabolic resistance. So now we're paying attention to Slinky Theory. You know, we have a high, we hit the stair, we come up, you know, the Slinky comes down, the back end of the Slinky wraps back up, and then tops out lower, and then we come down to the next stair, and then the back end of the Slinky wraps back up, and then comes back lower, come down to the next stair, and that's what we got to pay attention to. Because right now, this looks to me like this is topped. We had the parabola powerfully to the upside, and then break down from that, find support, parabola still to the upside, and then we have the flattening, and now here we have parabolic resistance, and then eventually we consolidate here long enough underneath the 200 exponential and simple, and then we see the same thing happening. We see the strength of, oh, fucking TradingView, you son of a bitch. We see, sorry, I misclicked there. We see the same thing happening just to the downside. We see the intensity of the resistance, you know, basically creating a parabola back to the downside. And it's the same thing here. We break down from it eventually, and then we start seeing intense level of selling right here. And then again, start the uptrend, medium uptrend, flattening out, start the downtrend, medium downtrend, capitulation, and then eventually, you know, we would resume the uptrend. And that's just the breadth, like, not the breadth as in like different stocks within the market, but like, you know, the up and down movements of the market between like the bull and bear trends. So communication sector, probably the worst we looked at. I mean, definitely the worst we looked at so far. XLU utilities, that safety play. Nothing has really changed here. You know, this is still technically, as far as I'm concerned, a right shoulder. If we take out this area right here, we'll just say that it's definitely not a head and shoulders, invalidated. You know, obviously we'll pay attention to make sure it doesn't just double top right here. But this looks like it looks like it wants to keep creeping to the upside. We just flipped the blue slope line over right here. I think it's very unlikely after this like more recent kind of rally and support off the 200 exponential. I don't think this is going to break down here. Still could, but looks much less likely. Looks much more likely that we're going to get the initial thought that we had, which would be a retest of the heart line here, and then eventually the move all the way back up to like that $81 mark, which is, you know, just the macro uptrend of, you know, all of time. Since the beginning of time, there were utilities. Those utilities were range bound forever and ever. They will continue to be. So yeah, nothing really changed here. Looks like it wants to invalidate this right shoulder, which is fine. That's fine. Real estate, new high. Looks good. Got almost no pullback here when everything else did. You know, obviously, why did this happen? Everything else sold off. Why didn't this? Well, because rates sold off too. So if interest rates went down, that makes real estate stronger. So even though people were afraid of the CVD, we saw tech and real estate stronger because those are directly tied to rates. So there's so many different things working inside these markets that you have to pay attention to the overall narrative. And then when the FUD comes out or whatever it is, you know, the new variant, whatever's going on, we pay attention to how does that affect it. Well, if we know there's going to be a potential new variant, there's going to be potentially new regulations, lockdowns, whatever. What's going to do well? Well, interest rates are probably going to go down. So bonds are probably going to be going up. You know, real estate's probably going to be going up because if interest rates are low, real estate values can go up. Tech has the highest valuation, like, you know, percentage wise, like either sales or, you know, the couple companies that actually make a profit, PE. So the valuations are more sustainable, obviously, if the rates are lower. So, you know, we can get multiple expansion, and then vice versa. If something comes in and rates start to rise, we would expect real estate and, you know, tech to have the strongest moves to the downside. So, and then that's within the overall macro of everything else going on, where everything's going up. You know, so if the market starts capitulating, but rates are going up, we would expect tech and real estate to sell off less. If the market starts capitulating and rates are going down, wait, I might have said that the wrong way. Yeah, you know what I'm talking about. You know what I mean. XTN, so we had this big old ascending channel. Broke down from it. Put in a higher high, which is fine. Consolidating here. Made it back above that key support. Looks okay for now. Hanging out. Trying to move to the upside, it looks like. Again, I don't expect this to top out before the end of the year. You know, this has always topped out, you know, and we can just kind of look at these. Again, this is just going back for, you know, a decade or so. You know, these red lines are like time cycle analysis and just kind of seeing where does this top out, at least like short term or bottom out, etc. You know, we typically see here's a top in red right here in January. Here's a bottom right here in January the following year. Here's a short-term top here in January the following year. Here's a short-term top here in January the following year. Here's a, you know, bottom basically here in January the following year. Here's a top here in January the following year. You guys picking up on this? Very, very cyclical. Very, very cyclical. So the likelihood of this topping out right around this time, very, very likely to me. And each time we break down from one of these channels, we saw about a 40% pullback, you know, to the low, and it lasted about a year. So this was about a year and 35% from the macro top. This was kind of a double top, you know, depending on when you want to measure from, but this is about a year and a 25%. And then we came back up, retested it again. And then once again, you know, this one was actually right away. This was 44% and, you know, couple months. And then finally, we broke down from a channel again for the third time. Each of those happened after we break the channel. So, you know, from the high right here, what can we expect? Well, potentially like a year and somewhere around like 20 to 40% to the downside. And the measure move takes us right around like that 35%. And it just so happens we have a key, you know, resistance right here, like triple top resistance. So, you know, to me, this is a very, very key level to watch when we do finally, if and when we do finally break down from here. You know, where am I looking for a bottom at? Somewhere around like 68, 82, something like that. When am I looking for a bottom? Well, it's probably not going to happen that quick. Could see a situation like this where bottoms in like February next year. I think more realistically, it's probably like January 2023. So probably have a year of pain in the transportation sector, you know, with some little moves inside there. But again, you know, that's very subjective and very far out into the future. But, you know, we can see how cyclical that trades in comparison to our other stuff. You're not going to find that level of correlation where it does the same exact thing every year in January, either puts in a high or a low like that. Hail. So we have another one of these triangles, broke out, got the majority of the measure move, failed to get above that resistance right here, which is what we really wanted to see. Basically got rejected, came all the way back down, retested the triangle. Seems likely to me that we reclaim this level, push back up, and retest this. So again, you know, we have a top right here, we have a top right here. So if we hit it again, is it going to top? Well, I mean, probably, but, you know, this is where you can choose one of two things. You either sell into the top, you sell into resistance, and assume it's going to get rejected again, or you figure this time's different. We hit it once, we hit it twice. Third time we break through, hit the measure move, retest the all-time highs, and then keep scooting. But again, you know, this thing is likely to be topping out. When? Probably in January. So realistically, I mean, how much more move can we get before, you know, in the next month or two? Probably not that much. So I would probably take the safe bet right here and be selling into resistance. Jets is next. You know, basically came down, put in a lower low. Didn't quite make it to our target. But again, I think this has downside. This looks terrible. $18 seems very, very likely. We are officially in a bear market on jets. And let's just remember, you know, everybody's like, oh, the airlines, they're coming back. It's strong. This time's different. The bailouts, and they're not laying people off, and the pilots. This topped out in January 2018. All-time high was in January of 2018. So this is trash. The airlines are trash. They're never coming back. Ever. Everyone's going to be living in the metaverse soon, and they're all going to have their own private jets, okay? God, that sounds so ridiculous saying that, but it's probably actually true. UPS. Everyone's going to be in the Mile High Club with their hand. Nah, that's not funny. It's gross. UPS, same thing, you know, very cyclical. I've been closing these gaps left and right. Not a lot here. I think this thing probably comes up here and puts in a new all-time high. I mean, again, the area that we're just watching, it's the same thing. I mean, we just have a very clear, you know, resistance right here. So once we break through that resistance, this thing just rips. If and when 217.54 breaks, this thing just rips. We can do measure moves and all that stuff, but I just don't really feel like it. And I'm sure you figured it out by now. If you've been watching this channel for any amount of time, I'm sure you know exactly how I do it. Fib extension and go. FDX, FedEx. Yeah, I mean, looks like trash. If somebody holds a gun to your head and says, invest in UPS or FedEx, which one are you investing in based on these charts? I mean, UPS, above the 200 exponential on simple, bouncing it perfectly near the all-time highs. FedEx, below the 200 exponential on simple, clearly in a bear market, getting rejected. This thing looks like it's about to get wrecked. Yeah, FedEx is trash. I'm sure there's going to be some kind of scandal soon. You know. Oh my God, they were letting people mail liquid and hazardous materials. FedEx is the devil. Oh, I mean, I don't know what it's going to be. I just made that up. But, I mean, it's going to be something I'm sure stupid. And then people will be like, I knew it. I knew FedEx was up to no good. I'm sure it'll have nothing to do with the technicals. It'll have nothing to do with the chart that was telling this for months. All right, we're about an hour in. Ripping. If you're in the chat right now, you got any questions, assets you want me to look at particularly? Any comments? You want to let me know where you're at, where you're from, whatever. That's great. Any interaction is greatly appreciated. For the algos. I mean, I shouldn't ban all the bots because they love to participate. They always comment on my videos. You know, they're kind enough to share their scammer links. We already had 3 bots to stream. I mean, that's great. That's literally, the bots are up to par with the actual real people. Oh, no, wait. Technically, the bots are better. We have 3 bots so far. So, I mean, if you're here right now and you're not a bot and you want to beat the robots with me right now, do it. There we go. Okay. Now it's 3 bots, 2 regular people. UK pot stocks. Oh, you're in the UK and you want to look at pot stocks. Okay. And the teary face? I'm with you, brother. I'm with you, man. Trust me, I feel you. So yeah, we'll definitely look at pot stocks. The Shin Chan 2, appreciate you, brother. And what's up from the United States to the UK? I love the UK, man. Great place, great people. I got a lot of good friends from the UK, still in the UK. Love the people. Don't love the teeth, though. Let's be real. But it's your guys' thing. I mean, come on. All right. So apparently the rest of the people just watching are either bots or don't want to talk. So, yeah. So let's jump over to, we're going to veto crypto and we're going to hit up the pot stocks. Oh, yeah. And, you know, I've been saying for a while, with miners and pot stocks in general, bottom might not be in on these. Bottom might not be in on these. So let's be careful. So we'll just rip through our commodities real quick, and we'll spend a little extra time on pot stocks. From man, the Shin Chan 2, the second. Gold still below the 200 exponential and simple. Nothing has changed here. It has to reclaim this level, 1800. And the truth is, gold is slow and steady. It's like the rabbit. No, wait. I was about to say the rabbit and the hare. It's the turtle. Gold is the turtle. It's just chilling, doing its thing, waiting for the rabbit to get tired, and then it'll do well again. But as long as the rabbit's still bouncing around, you know what I mean? All high on amphetamines. It's all juiced up on Mountain Dew. Rabbits bounce around all over the place. Crypto's exciting. Stocks are exciting. Gold's just kind of trekking along in its shell, eating some lettuce. Just chilling. That's gold. Okay? But what we don't want to see is, we don't want to see it get dehydrated and die. Which looks kind of likely. Silver looks terrible. Much worse. Very clearly in a daily bear market. At support. Last line of defense. If we break down from the top, we're technically below support. This looks absolutely terrible. So if you're a silverback, you better get all your silverback buddies. Go sell your comic book collection. You know, maybe steal the title to your mom's house. Take it to the bank. You know, maybe just take a cash out refi on your mom's house and go buy some silver. Prop up the market. Not financial advice. I also don't want you to break the law. I'm literally just joking. But also, I mean, if you're a silverback, you probably do still live with your mom. Let's be real. No offense. And I love silver. But come on. Let's be real here. Gold silver ratio. Still very bullish on the monthly. Looks like it's getting ready to cross the upside. What does that tell us? If you were going to put a gun to my head right now and said, you have to buy $10,000 in gold or silver, which one's it going to be? I'd be like, easy. Gold. Gold is about to strengthen compared to silver. Every time we've seen across to the upside, this here we saw across to the upside on the monthly, gold was strong for years and percentages for days. Like, that didn't really make sense. Gold was strong for the next 1,551 days and had a 44% gain over silver. So, you know, that's a long time and a lot of gains. So if we're doing that right now, you know, and then the next time that happened, the 821 crossed on the monthly, what happened after that? You know, just to the cross back down, again, 25% and 1,218 days. If you go to the top, it was 82% it gained on silver, you know, and over 1,200 days. So, I mean, we're talking about years of gold just beating the shit out of silver, just holding it down like a big brother and just punching it in the mouth, knocking out its little silver teeth. Okay? So, 1,200 days, you know, what are we talking about here? I mean, let's move this over. I mean, we're talking about 12 to 1500 days of gold just beating up its little brother, beating it bad, beating down silver. Okay? No solar panels, no batteries. Nobody gives a damn about you, silver. You're ugly. You got no friends. Gold's just on top of you, just punching you in the mouth, knocking out your little silver teeth. Okay? 41%. 2025. The end of 2025. If you want to buy silver, buy it in 2026. Because that's when, theoretically, based on these last two cycles, that's when it's going to be strong again compared to gold. But in the meantime, I mean, are we looking at basically like 4 to 5 years of gold just pounding silver into the dirt? Sure looks like it to me. So maybe you should change your name from the silverbacks to the goldbacks, okay? Because then you might actually be a winner. Or you just keep being a loser. That's fine. Completely fine. And I'm not saying sell your silver. I definitely wouldn't sell my silver. But let's be real. Gold looks way better. Platinum, clearly in a bear market. Got our measure moved perfectly. Hit both targets. And now it just looks like trash again. Revisiting the lows right here. Platinum just looks so terrible right now. So terrible. First Majestic. Trash. I mean, it looks ready to break down here. Probably gets a pushback up, but I mean, it's clearly in a bear market. Silver Junior, clearly in a bear market. These mining stocks are terrible. And if gold and silver break down, these things go immediately straight to zero. Immediately to zero, and you just lose everything. Well, probably not literally. Maybe not literally straight to zero, but figuratively, they go straight to zero. They go down exponentially fast. GDXJ, gold junior miners, terrible. Terrible. Failed breakout again. Bear market. Copper, still just consolidating. We have this very clear support right here. We have very clear resistance right here. And we are just flagging out in the middle. Just consolidating. Typically bullish pattern. Could easily see copper break down to 24. Could easily see it back up at 29. Eventually when it breaks to the upside though, I do expect it to go parabolic again. Very, very bullish on copper long term. Very bullish. For pipes, for electricity, for all kinds of legitimate fundamental reasons. Dwindling supply, etc. Lithium. Basically hit our targets to downside perfectly. Blue box area, retesting. Trying to go back to the uptrend. This thing looks like it's going to push back up. Maybe even put a new high. But I think probably it finds resistance at $100, and I think it's heading lower. I think it bounces to 100, then back to 75. Hydrogen came all the way back down. I mean, just got absolutely wrecked. I mean, this was exactly what we were saying about this. Just didn't seem sustainable to me. Looks like it wants to have another move back to the upside. About to get a hard buy signal. Below the 8 and 21, though. Let's see. If it gets back above 25, I could probably get bullish again. But there's very clear resistance right here at 25. Until we break through this level, it's going to look a little sketch still. This area really has to be broken. Once it is, we'll be above the 8, above the 21, above that long-term resistance. And then this thing just rips to the upside. But the fact it came all the way back down to low is not great. Stopped at the 786. Almost made it to 886. Nearly down to our target. I mean, and that was just like a greedy target. That's just ridiculous. Lumber looks strong. Back above the 200 exponential on simple. Not quite invalidating the head and shoulders so far, but looks very strong. Looks like we're going to see continuation. It is getting up to like some pretty ridiculous levels. Let's look at it on the monthly and see what's going on here. Yeah, reclaim that 821. I mean, this looks strong. It looks real strong. That was pretty aggressive move back up. So if you're trying to get some wood, better hurry. I wouldn't wait. And this is good for like the economy technically. It means people are going to want wood in the future. So maybe we're not like going into a Great Depression. So that's probably a good sign. Yeah. It's not bad. Reclaiming these levels, averting a bear market. I mean, technically it was in a bear market, but yeah, it looks good. USAS, bouncing support, back down at that entry level. Still looks like trash. All these miners just look like trash. Okay, so here's some pot stocks. Hey, there we got some not a bots in the chat. Appreciate you dudes. Uh, what is that? Kezolino? Appreciate you, my man. Glad that you're not a bot. Mr. Lex, good to see you, brother. How's the boy in his mother's basement? Not good, man. AMC not going well. All in on Game Stonk. Tesla's the only thing holding up his portfolio. But his mom wants him to unload. There's 9 months worth of dishes that are going to need done if he wants to make his $10. So let's look at these pot stocks and why they're just absolutely just murdering everyone. These things topped out in 2018. Since then, the world went into like the most ridiculous like bull market ever. Cryptos went parabolic, stock market parabolic, everything literally but airlines, oil. Well, I mean energy technically. Everything but airlines, energy, and pot stocks are putting in all-time highs. So why are pot stocks so bad right now? And is there a reason to stay bullish? Is there a future? Or are they just garbage? All right, here's fundamental reason. If you live in a place like, for instance, United States, where these are federally, pot is still federally not legal, or it's illegal in different states or whatever. In the future, fundamentally, what's the government going to need more of? Money. They're spending money hand over fist. They're spending money they don't have. So everything they're going to be trying to do in the future is going to be to figure out how to get more money. Republicans, Democrats, aliens, creatures from the center of the earth, whoever gets elected next, whoever our next politicians are in the United States and probably pretty much anywhere around the world, all they're going to be worried about is how they're going to get this money to keep spending or keep maintaining the system as how it is. Can we grow our way out of the system? Can we devalue our currency so we don't have bankruptcy? Are we going to have hyperinflation? Are we going to have deflation? Who cares? None of that matters. The most important thing is, in the future, what can we expect? More of the same. What is the same? Government spending money they don't have. So how are they going to continue spending money they don't have? They got to figure out how to get more money so they can spend more money. So where are they going to get that money from? Things that they're not currently taxing. So they're going to raise taxes on stuff that they already have. They're going to figure out ways to try to tax, unrealized capital gains, death tax, estate taxes that they don't already collect, millionaire tax, business tax, like any extra taxes they could possibly imagine. And what is one of those? What's a massive industry? Well, let's look at Colorado. They legalized pot a while ago, years ago. And they had I can't off the top of my head say the numbers, but I mean, it was literally tens and hundreds of millions of dollars in revenue generated from legalizing pot. So now is Colorado horrible and terrible and the crime levels through the roof? No. And where did a lot of that money go? To the school system, to the government. And how is the school system there? How is the overall demeanor there? Well, maybe it's better, maybe it's worse, maybe it's a bunch of libtards, whatever. But arguably, they tax something they weren't taxing before, and they're at least as good a shape with more revenue, arguably better. So, in my opinion, in this little breakdown that we did, let's say, for instance, space aliens win the presidency next year, and then they're like, oh, how are we going to get more money? Probably taxing pot. So when is it going to happen? 1 year, 3 years, 5 years? I don't know. I can't see the future. But the fact of the matter is, let's say it's the Republicans. Probably going to be taxing the pot stocks, or pot in general. So I do expect these things to pull back out. So there is still some hope. And the people that were patient in the pot stocks are probably going to do extremely well in the next bull market. But the fact of the matter is, we were in a bear market forever. We confirmed the daily 821 cross back up down in here above the 200 exponential and simple back here in December 2020. And then here we rolled back over the 200 exponential red here. And then now recently in October, mid-October, we rolled the 200 simple back over. So we are back in a confirmed daily bear market. And this was our low right here. Again, Slinky Theory. We have a high, we have a low, we have a lower high, we have a lower low, we have a lower high, we have a lower low. What's the most likely thing that happens next? Lower high, lower low, lower high, lower low. So, typically bear markets and bull markets end one of two ways. They either go parabolic. So here we see parabolic to the upside and then slow bleed out. Here we see parabolic to the downside and then slow move back up, higher low, and then parabolic to the upside, slow bleed out. So eventually, what do I expect? It doesn't have to be the case. We could get just a rounding bottom, but I have a feeling that we're going to see like a capitulation move in pot stocks when people are just like, you know what, F it. I've been in these things for years. We're getting absolutely crushed. Everybody else, bet on Shiba Inu coin, and now they're driving Lambos, living the good life. And I'm over here. Could have spent that money on actual pot. Instead, I bought pot stocks, got nothing for it. I give up. So that's probably going to correspond with some kind of like big wick or something like that. That's a big buying opportunity. Are you going to be okay right here? If you just went all in right now, or you've been going all in, buying the dip the whole time on the way down, a couple of years from now, are you going to be at new all-time highs? Sure, probably. If you bet on the right companies, whatever, sure, you're probably fine. But in all reality, that's not how we trade. That's not intelligent. I don't like dollar cost averaging into a downtrend, because if you're like, I'm going to buy here because it's a new low, dollar cost averaging. Yay, we're doing it. Oh, no, we're low again. I'll buy again. Oh, no, we're low again. I'll buy again. Oh, no, we're low again. And I'm out of money. No, not cool. Dollar cost average into an uptrend when we're above the 200 exponential and simple. Sell back out when we break back down into a bear trend. Trade with the trend. And right now the trend is down. So, while I may take some scalps here and there, I'm really just not interested in, just accumulating. Again, if we go to the weekly on Tilray, we don't have the 200 exponentials in play just because it hasn't been around long enough. We can see on CCG, J, but wait, did I say the right one? CGC, I mean, because there's a little more of like a chart. But we can see 821 to the downside, 821 cross right here on the weekly, 821 to the downside again. Just, in my opinion, just not the time. And then finally, if we just do the same thing on the monthly, we'll see basically tried to reclaim the 21, got rejected, massive rejection wick, and headed back down. So more than likely, we revisit the lows on Tilray. 631, maybe even all-time low, $5. When you look at the balance sheets of these companies, you look at the valuation, the asset to book, or price to book value. A lot of these things are trading at a discount, which probably means that they're hated. I mean, they're definitely hated. So, can you dabble a little bit right now? Sure, but I wouldn't just go crazy. We're still definitely in a downtrend. If we look at Tilray and, my projection for what I was expecting, we basically, looks like we put in the 1 off the bottom right here. The 2 retracement came down to the 618 from the 0 to the 1. So 61.8% of the move. And then we do another Fibonacci. I will switch this one over to, we'll make this one blue. So we have another Fibonacci from the bottom of the 2 to the top of the 3. We come retrace back down. This was the 618 that we were bottoming out at. We now have technically come down slightly lower than the 1 and almost to the 786. So we're basically in danger of invalidating this 5-wave structure. But technically, let's look at the monthly and see what it looks like. I mean, arguably it could be okay. Let's look at where the monthly is at. Yeah, I mean, this is still in play for now. I mean, the monthly is 982, which is basically at right now. So if we get a monthly close below where we're at right now, I mean, it's pretty much a wrap. So that's the last thing we want to see, is any lower price action like for a long period of time. And then let's just kind of look back out at this. So that was our pullback to the 618/786. First time was 618. Then we had the blue retracement. So then again, let's just assume. Let's just assume we get another pushback up here. Well, how can we predict the target to the upside? We're going to use our Fibonacci extension. So if we go from the top of the 1 to the bottom of the 2 right here, we can get our Fibonacci extension to the upside. And I'm going to turn that, let's make that yellow. And I'm going to just make it a little bigger and then I'll delete it. So we can see we basically had our Fibonacci extension come up to 2.618. And that was the top of our 3. So if that happens again, and again, we have to assume where this bottom is going to be. But let's just assume it's right around where we're at right now and not much further. That can give us our projected upside target. So again, If we hit the 1.618, that's basically a retest of all-time highs, which is like $240 roughly, not quite all-time highs. If we get a retest of like the 2.618, that's going to take us up to, $1889, almost $2,000. If we get the 1.236 of the macro top to the macro bottom, which was, all the way up here, previous all-time high to the previous all-time low, and then we just fib that. That's our orange fib right here. That gives us our Fibonacci extension 1.236 target, which is $957, right around $1,000. So the main area, it's a huge range, obviously, but the main area I'd be looking for us to top out is, somewhere in between there. Somewhere in between the 1.618, $240 to $939, maybe $1,925. Does that sound ridiculous? Sure, it does right now. It does right now. But let's see what plays out. Commodity bull run over the next 2, 3, 5 years. Pot stocks exploding. It's legalized. Government taxing the hell out of it. Does it seem that unrealistic? Not to me. But again, that's like super bullish, best case, amazing scenario. And just for mental gymnastics, just to feel a little life again. Because I know most of you guys probably look at these pot stocks and you're just dead inside. That's a 9,919% move. Back up to like 957. So we'll round it off. We'll call it 10,000. 10,000% move. So, you put $1,000 in at $10. It goes to 1,000. Are you 100,000-aire? You are. You did it. You got the 100K. Maybe put 10,000 in. Maybe hit that $1 million mark. Maybe you lose it all. Maybe Tilray goes broke. But you know what? At least you tried. At least you tried. But honestly, though, Tilray probably just goes straight to zero. It's definitely on its way right now. But I'd rather get in at $5 and then you just put in, $5,000 and then you have $1 million and it hits the same target. So that seems pretty realistic to me. And then we can call ourselves the Tillionaires and we'll just only talk about pot stocks every day. We'll just smoke weed like Snoop Dogg and talk about our $1 trillion trades, our $1 million cannabis trades. Okay? We can all we get an island, live it up. Let's look at ACB next. We can do the same thing for all these pot stocks the exact same way. ACB, again, just it looks rough. These all look just terrible. Absolutely terrible. Clearly in a bear market, rejection, seeing continuation to the downside. Nothing looks like it's going to change. Does not look like it's bottoming at the moment. We're at pretty key support levels. On the weekly, the 200 exponential and simple, very, very clearly angled to the downside. Been in a bear market forever on the weekly. And then finally, if we go to the monthly, 821, we cannot close above the 8. We have not been able to close above the monthly 8 literally since September of 2019. So that'll be the first sign. On the monthly, if we could close above $7.63, $8, above that 8, that'll be the first sign. It's trying to bottom out, but it looks like stochastics like rolling back over. Looks like it's headed back down to revisit the lows. What are we looking for? What do I want to see? I want to see some kind of bullish divergence off the lows right here. I want to see it round out a bottom, either higher or lower, put in some kind of bullish divergence, and give me some sign on a longer time frame that this might be bottoming. But right now, still just looks like absolute trash. Absolute trash. It looks horrible. Every time we try to get some kind of head and shoulders bottom, it just fails. And you know what? That's the reason to just be scalping these things. I'm just not trying to invest in the pot stock space right now while it's just getting absolutely crushed. You're trying to catch a knife as far as I'm concerned. So what are we looking at? Same thing. So let's look at our fibs and try to get an idea as to what we could have playing out. So let's just get rid of everything. There's nothing really useful on here. So let's see, from our low to that pushback up right here, we're basically at the 786. We hit the 786. We're retesting the 618. So maybe we already bottomed. Maybe that was it. Again, it's a maybe though. I mean, we could easily come back down to 886, retest the low, maybe put in a new low. Who knows? So no signs of bottoming yet, but potentially, this is a pretty key level. We see some pretty clear resistance and support. Here we topped out. Here we see very clear, support at the 618, very clear resistance at the 382. 0.5 is getting some action right here. We're seeing clear interaction with this. So this tells me there's a pretty decent likelihood based on these levels. Even on the way up here, we see a perfect top at the 236 before we even know we've topped out. 701 at the 618. We see some very clear interactions with this. So in hindsight now, looking from the bottom of the top, this looks like this is probably done. We probably have put in their all-time low. But it can consolidate down here forever. Could easily come back down to 538. The real level to watch is, if we take out this 0.5 level, 850, then we're looking at the 382 at like 1034. But I mean, this is just god awful. So let's just put a Fibonacci extension in play. And again, let's just assume that this is bottomed. And again, if you look at the value of the assets on Aurora Cannabis's books, and then you look at the value of, market cap or like total common stock multiplied by the price, you can look at it and say, is this cheap or is this expensive right now? Well, a lot of like tech stocks are trading at like 100 times sales because they have no earnings because they're not profitable companies. Well, ACB is trading at like something like, I'd have to check, I haven't looked recently, but it's like 66% of book value, which means if they literally took everything they owned and just sold it at like, the value it's on their books, they could pay off all their debts and they would still have like billions of dollars left over. So there's a strong argument to be made that these things, especially this one in particular, is undervalued, which makes sense, because it's ugly, it's hated. Nobody's liked it for years because it's just been getting crushed. But assuming this is, the one, and then we're putting in 2 right now, and then we're going to potentially get like a 3. Again, still way too early to tell, but just so we can kind of get a couple of targets and then look for some kind of confluence between them. Let's say that was our, a top of the 1. This is our retracement to the 786, which is a pretty bearish retracement. Not what we want to see. Our target to the upside would be the 1.618 at like $40, or potentially 2.618 at like $140. So let's just assume a conservative target to the upside of $41, and then again a retracement back to the top of the 1, which is around $20. And then we just did the same thing again. Again, this is very, very hypothetical because we're theorizing where the 2 is, we're theorizing where the 3 is going to be, and then we're theorizing where the 4 is, and then we just take that, extrapolate it out to 2.618. Well, that takes us back up to that double top all-time high. So back to $152. So does that seem reasonable? Well, it doesn't seem unreasonable that this thing could have a 5-wave strong uptrend and just get back to the previous all-time high. Matter of fact, that's probably like undershooting it a little bit. And just to check for validity, the length of the 1 would be $15.18. So then from the 2 to the top of the 3 needs to be higher than $15 if this is going to be valid, which it would be. It'd be $34. And then obviously we would just look at, this would be irrelevant at that point in time, but that would be $130. So it would be like a truncated wave 5 back to the previous all-time high. That seems realistic to me. I mean, this seems viable for, a hopium extrapolation of levels that have not been like confirmed yet. But I could easily see this taking some sort of like path like that. So let's just look at what this would look like. So if our first retracement took us up to basically the 382 on the daily, and that's where we topped out, and then we came back down below the 236, and then we pushed back up to the 618, that would be the top. So it would be basically a 61.8% retracement of that move to the downside. And then we come back down, find some kind of support at the top of the 1, somewhere around like the 382 or the 0.5, and then we push back up. That seems realistic. I mean, it would probably take a lot longer to happen. I mean, again, we don't know when these things are going to happen, but we have a strong fundamental argument for what the future looks like. And we know governments are going to want more money. They're going to want to pay for stuff. We know that this is going to be a big industry into the future at some point in time because, I mean, let's be real. I think it was like they like took a poll and it was like 60% of people in the United States say like, fuck it, just legalize pot. And we got alcohol, let's be real. So I think the future, it's at least decriminalized now. And I think like 60% of states or something like that. I was about to say 60 states out of 51. So realistically, the future says, it involves cannabis, or at least, this industry. So it seems realistic. Seems very realistic. Let's do one more. CGC we'll do next. So CGC has a longer time frame on it. So obviously daily, massive bull run, bear market, little itty bitty bull run, and now still in a bear market now. Retesting basically those lows down here. Not good. This thing has been very weak. Weekly chart has just officially rolled over into a bear market. Basically like September, beginning of September, on the weekly. I mean, that's not good. This is the first time this thing has ever been in a weekly bear market, going back to 2014. So definitely not good. Not what you want to see. And then just looking at the monthly, not a lot of extra info right here, but yeah, I mean, this is definitely rough. Not what you want to see. And again, Slinky Theory, we got a high, we got a low, we got a lower high, we've got a lower low. Most likely thing to happen is eventually bottom out, come up, put in a lower high again. So, what does that look like? Okay, I forgot we even had this on here, but looking at this on the monthly, I mean, what does this look like to you? It looks like a giant Eve, a rounding top, and then a V, Adam. So it looks like an Adam and Eve double top. And where are we at right now? I mean, we're basically at the neckline of it. So if this thing breaks down from this level, I mean, this is like, it's effed. It goes to like $5. It loses like 50% of its value. You can't even do a measure move on something like this because it would literally go to the center of the earth and come out on the other end of the earth. It would be so low. It would be so low they would have to literally pay you to take it. It would be negative. It would be like interest rates. Negative. Yeah, it just looks terrible. I mean, does this thing go to $5? We're going to know soon because if we lose this support level, and I mean, on the monthly, technically, we already lost the support level at $14. So we already broke down on the monthly from key support. So this thing probably gets wrecked. But we have obviously a descending resistance up here at the top, 240% target. Maybe it goes to like $40, but does it go to 5 first? I mean, if it goes to 5, I'm a buyer at 5, and then I want to ride it to 40 or 30 or something like that. But this thing just looks terrible. Looks absolutely terrible. Probably is bottoming though. I mean, I can't imagine these pot stocks go much lower. If they lose like another 30 to 50% of their value, that's probably the bottom. Oh man. But again, this could just play out over a long period of time. On the weekly, we technically didn't take out like the weekly close right here. There's a strong argument to be made for a scalp right here too. I mean, you could put in 27% stop loss, take a small position, with a 240% reward to the upside if we find support right here, or even half that, just a reversion to the mean, just for like a more conservative target, let's just say. Let's put one up here. Let's put up a realistic conservative target. If we take out the low, we no longer want to be in this trade. So let's say a 10% stop loss. And then what are we shooting for? What's our goal? What's our target to the upside? Well, we're looking for the reversion to the mean. We want to see a retest of the 200 exponential. So 100% target to the upside, 9.9% stop loss to the downside, 10.45 risk to 1. We flip a coin. If we're wrong, we lose $1. If we're right, we make $10.50. That's not bad. It's not a bad gig. I mean, but again, we could lose this trade how many times in a row before we're negative on it if eventually we get it right. So, You know, and we haven't taken this trade 9 times already. So, you know, it's probably worth a shot here. Looks like it's trying to come out of the bottom. It's trying to put in some kind of bottoming pattern here. But again, I mean, we're just like catching a knife. Man, this really does look like it kind of wants to bottom, honestly. I mean, if we're kind of looking at this, you know, obviously this is just part of that atom. But, you know, we can see this as like a clear resistance on the way down, multiple touches. And then we pushed out of it that once, and then it failed, came back down. And now we'll see, does it act as resistance here? Because if this breaks back up above that blue support and cross 821 to the upside, I mean, I'm definitely taking this trade. If it can't get above the resistance right here, though, it probably just keeps getting crushed. And if it does, it's going to, you know, you're not going to have time to exit this position if it breaks down from here, because it's just going to get destroyed. But yeah, I mean, 10-to-1 risk reward ratio, you don't get a lot of those. Not realistic ones. You can put in like some hopium ones or whatever, but this is just a quick push back up to the upside. Yeah, I mean, this thing has just gotten crushed, but that's a 100% move. So yeah, that's it for pot stocks. Dear God, another one? The bots are on full effect, huh? Oh, look, a girl. A girl bot. That's so crazy. Huh. That's so weird. I can't believe it. Who would have thought? It's got to be a real person, because there's tons of girls who watch these videos in this space. For sure. Not. There are not women who watch the streams. So uranium. Okay, so been calling out the triple bearish divergence on the daily on uranium. This is URA. We had a very clear, you know, wedge pattern forming. We had the triple bearish divergence. 1, 2, 3 drives. 1, 2, 3 drives. Breakdown from that level. Hit the measure move. Came down almost perfectly to 200 exponential and simple. Got bought up pretty aggressively. Looks like we're about to get the hard buy, leaving the bearish control zone. There's definitely an argument to be made on uranium. It's tough for me because it's come so far already. But you know what? I mean, where's the best place to buy in a bull market? The 200 exponential and simple moving average. So, I mean, you know, this thing could easily be right back up here at the highs, 31, and just keep on ripping. So, yeah, I would have to say it looks pretty good. UEC, same exact thing. You know, didn't put in that same bearish divergence, but broke down from the pattern, touched the 200 exponential and simple almost perfectly, got bought up pretty aggressively, leaving the bearish control zone, it looks like, about to get the hard buy. These things look like they want to push up. Uranium looks pretty strong here. You know, and yeah, I mean, URNM, North Shore, same thing. You know, came down to the blue box, hit the measure move, hit the 200 exponential and simple. Every time you bought, you know, since we crossed basically into a bull market back here in November 2020, you know, if you bought the 200 exponential, since then it had a parabolic move to the upside. So what's the likelihood it does it again? I mean, it really looks good. And the truth is, I mean, this thing probably just goes ripping. It probably ends up at like 115. So there's a, I mean, this thing probably just, uranium probably just shoots up another like 40% here in the near future. I mean, we'll see. There's a lot of stuff going on. A lot of headwinds, but there's also a lot of tailwinds, and it's really picking up some steam here. CCJ, one more of the uranium stocks, Cameco. Again, kind of front ran the target, but hit our blue box area, almost hit. Didn't quite hit the measure move. Again, triple bearish divergence. Coming out of the bullish control zone, bearish control zone rather. A couple red histograms. Looks like it's ready to rip. And if we just zoom out and look at the monthly on this thing, I mean, this looks amazing. You know, we basically are in a bull market all through here. We break down into a bear market in 2014. This topped out in 2007 it topped. 2014 it confirmed a monthly bear market. And now here we have crossed back above the 200 exponential. And now here we're back above the 200 simple. So we're basically in that. This is basically the retest of the 200 simple at the beginning of a bull market in uranium from our last all-time high of 2007. So what does that mean? I mean, it means this thing could rip to the upside. I mean, oh, we already got that in play. So if we just look at our Fibonacci extension target, the 1.236 Fib extension on CCJ is $97. That's a 3x. The 1.618, which is usually my target, is $237. So we buy it at 32 right here. We just forget about it, and it goes to 237. How are you going to feel about that if it goes to 26 before then? Who cares? I mean, realistically, that's what we're looking at. We're looking at 927% move. Basically a 9x. So, I mean, there's not a lot of things that look better than uranium. Pot stocks look real weak and there's a lot of upside potential. Silver and gold look weak and miners look weak, but looks like there's a lot of downside potential still. Uranium looks strong and there's a lot of upside potential. So if I was going to buy one of the 3 most hated things in existence right now based on price, which are, in my opinion, 3 of the most interesting sectors because I'm a value investor, I would say those 3 things are, gold and silver / mining stocks, CBD / pot stocks, and uranium / uranium stocks. So if I was going to invest in one of those 3, I would rather invest in the one with momentum that looks the strongest. And in my opinion, based on technical analysis, it's uranium. So that's where you put your money, in my opinion. That's where I put my money. I mean, but I've been putting my money there also. But weekly chart, again, same thing. We went into a bear market on the weekly in 2008. We know what happened then. We entered the bull market in uranium in December of 2020. So if this bull market is, and I don't like to compare one bull market to the next. It's possible we break back down, retest the 200 exponential. Maybe this thing goes back down to $12, loses 50% of its value. Everybody says, oh no, uranium failed. There's a nuclear power plant meltdown, whatever. The last bull market was 1,413%. Doesn't have to happen again. The last bull market was 2,065 days. You know what I mean? So we're talking about like 6-7 years. So, what is a 6-7 year bull market? That's, what did I say? 15. Let's just say 1,200%. And, 5 to 7 years, something like that. What are we looking at? 2025, 2026, something like that. And, again, I'm not trying to sell that hopium. But, I mean, we're looking at something like this. We're looking at something like $138 Cameco. And it's at 23 right now. I mean, there's a strong argument for that. And this is not just hopium either. These are like legit actual, based on previous long-term commodity cycles. Oh, again, we already got that one in there. So the, these fib extension targets, I mean, are we going to 240? Are we going to 10x Cameco over the next 6 years? That doesn't seem unrealistic to me. I mean, if you don't believe me about uranium, or you're not bullish on uranium, or you don't know anything about uranium, start looking up how many nuclear power plants are currently being built right now. And then compare that to the amount of nuclear power plants that are in existence or currently running right now. We know we're going into a massive energy deficit in the future. Where are we going to get that deficit from? What's the greenest, cleanest, most reliable form of energy that's actually realistic and functional? Not like, we can capture farts and use them and we'll process them into healthy air and we'll just put balloons on cows' bottoms and we'll use the sun because solar energy and the wind. We'll use the wind too and the waves. This is great and everything will be green. Sure, okay. One day it will be. But the tech's not there. The infrastructure's not there. None of that's real stuff. So let's look at what the market, what the world is doing right now. What energy infrastructure is the world building right now that actually works and is functional and is not just some like little pet project that you like give to your kids to make them happy because they don't want you destroying the earth. It's called nuclear power plants. Okay? So look into it. Hundreds of them. And it takes literally decades to get permits, to build these things, and then get them up and running. And there's record numbers of them being built right now. So what does that say for uranium? I mean, you want to get, if somebody asks me, what are you the most bullish on for the next 5 to 10 years? I would say nuclear power. Okay, so yeah, let's just finish up a couple of these bad boys and keep on rolling, baby. So Caterpillar, still doing nothing at resistance. It's bear market. Man, Caterpillar just getting ready to roll over, it looks like. Deer looks slightly stronger at the top of the range. Still just completely range bound. Nothing different here to see. Antero Midstream Corporation. So far, just putting in a higher low, retesting 200 exponential and simple. Looks good. Looks like it wants to rip to the upside. Looks okay, I should say. Cemex, still inside that channel. This does not look good. I mean, this is going into a full-on bear market. It looks like it's ready to dump. Looks like it's ready to roll over. Maybe gets one more retest up to like 750. But that's a selling opportunity, in my opinion. That's key support. I would expect it to act as resistance, and that's a 200 simple. We are seeing triple bullish divergence on the daily. So we probably do get that move. We probably do rip up to like 750. So, I mean, what do we got to do here? What does that give us for a target and potential trade setup? 20% with a 5% stop loss to take another stab at this thing. I didn't actually enter that previous trade setup. That was like a theoretical one before we actually made it to that level. But I think this is a legit, it's almost like a 4-to-1, 3.5-to-1 off triple bullish divergence off of the 236 for a reversion of the mean. This probably is a pretty nice 20% or 20% move. So maybe that goes on the list for this week. There's not a lot of great trade setups I'm seeing right now. So CLF, Cleveland Cliffs, just consolidating at that same level. Barely hanging on to 200 exponential and simple. Looks okay. This thing has just been going sideways forever. There's nothing really been going on in this since like March. I mean, I can't say that though. Obviously, it's come up here and put in a cycle high. I mean, 2 times. It's just been sideways for a while now. I really need to see a breakout or a breakdown before it gets interesting. Ford, I mean, it's hanging on right now. I'm real tempted to just exit this position, and I keep saying that. And I feel like whenever I don't exit a position, I keep saying it. I like always am like, damn, I should have exited that. I'm stubborn because I have such a good entry. I can't remember if I took any profits on this trade or if I still have my entire position open. And it's already like 3x'd since my entry. Yeah. I pretty much have to close part of this position or I just will feel stupid if it sells off. Sorry, I'm thinking out loud. Yeah, this looks like it's ready to roll over. So it's time to sell some Ford. Sell me. Yeah, definitely time to sell some Ford. Not be an idiot. GM looks okay. Not nearly as bullish as Ford, but at the highs. Looks like it's ready to roll over. Finding some support. This could go either way. I'm pretty neutral on this. It looks like it wants to break to the upside, but it's also losing momentum. It probably does break to new highs. Hasbro reclaiming that $100 level again. If we consolidate here long enough, I'm going to get bullish on this, but we're so close to Christmas now. I feel like this thing had its chance, and I just don't see it strong like into January, February, so I think this thing missed the boat. Works. Starting to look a little bit more juicy here. We'll see if it retests the low all the way at like $1. But in all reality, it's back inside a bear market, back below 200 exponential and simple. Yeah, we got to just hang tight on this. Wait for it to try to carve out some kind of bottom. I mean, it retested the low right here. If it breaks down from this low, it probably retests $1. If it hangs on long enough, I mean, what's it going to do? Go to $2? $1.38 to 2? 40% move. There could be a trade setup in play here. We never actually got a chance on that one. We'll see what happens with this. Any almost down to our target. Didn't quite get there. Retesting 200 exponential. Looks like it's rolling over. I'm still holding tight on this for like 269. Hard buy signal. I mean, we could take a stab at it now. What's it going to do? Sell off another $1? It's only 30 something percent. I mean, the upside on this is just so ridiculous. But it probably just goes straight to 0. But it's worth a shot. It's worth a shot. I'm going to hang tight a little longer, though. Walmart, the lifeblood of the economy in the United States, does not look good. I mean, this thing just like triple top, basically. 1 top, 2 top, 3 top. No. We're at support right now. You guys know I have a target on Walmart back down here to like, 126 to like $120. This thing looks like it's about to take the fast track to Rec City. If it breaks down from here, what is this? It's basically just a double top. And if we break this level right where we're at right now, basically, this thing is going to have a fast drop. I mean, it might be put time on Walmart. I mean, it's at support now. But, I mean, the options play on this thing to just get wrecked right now. I mean, something like a February expiration or something like that for 10+%. I have to look at what we got out there, but there's definitely an argument for this. I mean, because all the people that were shopping at Walmart because they couldn't afford Target anymore, they're going to be shopping at the dollar store because they can't afford Walmart anymore. So it's not funny, but it is. It kind of is. Carbon. I can't remember who asked me to look at this, but this thing is just popping off. At the top of the range right now. Probably tops out around this area. I mean, it's been acting as very clear resistance. We kind of popped out of the top right here. Probably going to do the same thing just because the thing's going like parabolic. You guys know how I feel about channels. Bottom of the channel, buying opportunity. Top of the channel, selling opportunity. Heart line, potential support. But it looks like we're about to put in the divergence signal. It is pretty spread out, though. This thing probably does shoot up a little higher before it sells off. A breakout could take it up real high. And then GRN, another carbon play. Same thing. Blasted through that resistance at like 25. Hit the heart line, and now it's just headed to the top of the channel. This thing probably goes to like $40. A little tighter on the divergence signal here, so we got to be careful. This thing probably does top out at the top of the channel, but, I mean, what a rip. Man, I wish you would have brought this to my attention sooner. I'd be in this one. Definitely missed the boat on the carbon credits. I'm not going to lie. Let's look at, what are we at? 2 hours right now. We'll wrap it up pretty soon. I'm going to take a quick look at crypto. Not a lot changing right here. Bitcoin futures just consolidating at the 200 simple. Exactly what we said. Just kind of hanging out here. I don't love this move. We basically came back up, filled the gap, like for the most part. But I don't like us just hanging out at the 200 exponential or simple moving average. The longer we spend just hanging out at it, the more likely we are to break through it. I think we probably retest like the 40s. Spot chart on Bitstamp, same thing. Just moving averages are flipped. The 200 exponential is flipping over bearish. The 4 hour is bearish. This doesn't look good. I mean, I'm not saying we're like going to new lows, but we're probably retesting like 40K, 42K, somewhere around there. We're probably going to we have this giant wick back up, this reaction rally off of like this, basically like cascading stop. We probably have bounced back up, and we're probably just going to bleed back out. I think first target is like 46 again, and then I think realistically we're coming back down to 42 to sweep the lows. If that holds, that's bullish. Higher low, continuation to upside. If it breaks, it's really going to look like that A, B, C expanding flat. I guess I could look at momentum and stuff. Stokes look like they're rolling over. All red, everything on the TJD, TDMACD. Regular Stokes are rolling over. RSI's rolling over. None of this looks good. None of the indicator oscillators look good. Ethereum, looks much stronger. Doesn't look great, but still holding strong. Just going to do what Bitcoin does, though. But the way this looks, I'd rather be in Ethereum right now than Bitcoin. So, at the Bitcoin ratio, bullish control zone. So again, just telling us what we already know. Ethereum is much stronger right now than Bitcoin is. Total market cap, barely hanging on to 21. If we break down from this level, 2 trillion is the target to the downside. After that, 1.2 trillion. This looks bad. Hard sell signal on the weekly. Bunch of red histograms. We lost the blue slope line. This looks bad. Looks very bad. We did have the cross right here and we saved it the first time. We have bearish control, bearish divergence on the weekly. Looks terrible. Bitcoin dominance looks like it's ready to break down. So alts probably do strengthen to Bitcoin right here. I mean, this is the last line of defense. It's like a triple bottom, but we have kind of, it's basically a descending triangle. So, I mean, what is this telling us? Alts, maybe some of the alts are about to just rip while Bitcoin gets crushed. I mean, I don't know. If Bitcoin looks bearish, I would think that if Bitcoin sells off, alts would sell off more, but that just hasn't been the case lately. People love their shitcoins. So maybe not. Or maybe like Bitcoin sells off aggressively, alts sell off aggressively, but get bought back up more aggressively. So like the buy the dippers just buy the dip shit out of like whatever trash bag coin they love instead of Bitcoin. I mean, that's what it looks like. Definitely looks like that. Fibonacci looks pretty terrible. Putting in new lows. 821 cross. I mean, this thing looks terrible. It has to get back above 4 bits of a penny. 0.00000000041 is the resistance we're paying attention to. And the support is like 0.0000003. So, looks terrible. Absolutely terrible. Sorry, wine moms. Solana. Yeah, it does not look good. It had some potential here. I have a small position on Solana off of the 382 support right here. This looks like it wants a break, honestly. This is like our third big test of it. If we don't break above like 201, this thing probably is going to go back down to 0.5. So, looks terrible. If it doesn't break. Man, looks rough. Does not look good. These things looked a lot better a day or two ago. Avalanche. Looks okay. Kind of putting in an ascending triangle. We see a very clear resistance here at 94. We break above that. We probably come back up here to like 104. So like 10-12% move. But we're looking at like 89.50 or like 86. This looks a little better, but again, 821 cross the downside doesn't look great. XRP, the 4-hour looked okay. It looked like it was going to do something here, but can't get above that 8. It really looks like it wants to come back up here and retest 95 cents. Again, I do have a small position in XRP. I took a stab at a bunch of these like random trash coins that looked like they were about to have the 4-hour 821 cross back to the upside. They were holding on to resistance. They don't look particularly great. And again, we see Slinky Theory in full effect. A high, a low, a lower high, a lower low. So again, a lower high. But is there a scalp in play right here? I mean, it's going to be 18% basically from my entry to my potential exit. Maybe more than that. Maybe we come up to like $1.15. It's going to be tough to get above this. We're in a bear market for sure on XRP. And it's definitely trash. Just as a reminder. Chainlink, again, had a nice move so far off our lows here. It was up like almost 10%. Gave back a lot of that. But again, I mean, confirming bear market. Looks like it wants to have one more pushback up here to like $25. But again, if we lose this level, this entry back at like 19, I think it was 1950 was my entry. If we lose that level, I'm out like trout. Matic, should have re-entered on Matic, but I did not. But I'm not greedy. Usually once I have a nice trade on something, I just leave it alone. So we did like over 40% move right there. Pushed up slightly higher. And now we're just back at where we closed our position. So, but it looks like it's ready to roll over. About to get the hard sell signal. Left the bullish control zone. It looks like it's gonna roll back over. I fully expect Matic back at like a $1.82. So, will I take the same trade again when it comes back down here? Will I just keep doing the exact same thing over and over, just trading the range, just taking free money from the market? Will I do that again? I 100% will. I will 100% keep taking the free money from Matic / Polygon / whoever the idiot is that just keeps giving it to me. Polkadot. Again, another one. Oh, wait. Did I open a position on Polkadot? I don't think I did. Damn, did I? No, I did not open a position on Polkadot. I did not. I apologize. 200, simple, kind of bouncing that, finding support. Looks pretty range bound between 32.30 and 28.50. So that's the area I'm looking for to break. Technically not in a bear market yet. 200 exponential has rolled over. Still below the 821. Seeing some pressure. No bullish divergence. This one could go either way. Didn't look particularly bullish. BAT still out of this position. Fully took advantage of the BAT position. As far as I'm concerned, this is topped out. Where am I interested on BAT again? Down here. I'm interested on BAT at like 80. I'm interested on BAT at like around like 80 to like 90 cents. Somewhere around there. A 50% drawdown, and then I'll buy back the same amount for half the price or twice as much for, what I got out of it last time. Just right now, I have no BAT, like literally zero, for the first time in a long time. Since I think it was like, when did we get into it? It was like 18 cents or 20. I can't even remember. I think maybe 25 cents or something like that. Yeah, 25 cents. And then we rebought back down here at 50 cents. I mean, this thing has just crushed it. This is the easiest trade too, because it's always like lagging behind everything else. Everything else does well, and BAT just kind of moseys around, and then all of a sudden BAT explodes to the upside. But you have forever to get in place for the position. So whenever the next move is to the upside or to the downside, I'll be right back in BAT. Right back in it. Uniswap. So yeah, came back down here perfectly, retested the 886 and that same resistance / support rather. Bear market for sure. Man, this thing looks rough. I wanted to take a position on this, but I mean, I think it did like a 15% move or something like that already, so it's not bad. It's at resistance right now, though. It just doesn't look good. Man, crypto just does not look good. Speaking of crypto not looking good, Cardano looks terrible. Terrible. Bear market, complete meltdown. Charles Hoskinson all over the internet just crying. He's not even doing AMAs anymore. He's just literally live streaming, and he just cries into his hands. I mean, feel bad for the guy. Not. Fuck you, Charles. MicroStrategy is next. Speaking of trash bag people, yeah, looks terrible. Holding on to support where it needs to be. Hanging on, barely. If this thing breaks down, I fully expect it to revisit the lows. Between $300 and $400 if this breaks down. If Bitcoin moves to the downside, this is about to enter into a bear market. MicroStrategy about to go into a bear market. 200 simple has already rolled over. Barely hanging on to 200 exponential. This thing went into a bull market when Michael Saylor started circle jerking the crypto community at $134. So if it goes into a bear market now, let's look at the last time it went into a bear market from 2000. Let's just back in time. Let's just look back at the last time we had a MicroStrategy bubble. What happened? So let's see. Entered into a bear market, roughly around somewhere around $423 and went down 99%. So does this bear market take MicroStrategy down 99%? Probably not. But if it does, I'm going to laugh. Robinhood got the little bounce off the 1.5. I'd rather buy it off the 1.618. I was tempted to add, I'm not going to lie. This is such a trash bag move right here, but hard buy signal. coming out of just an absolute beatdown, a murder fest. Yeah, I mean, this could go either way. It could easily have another 10% move to the upside. Such trash. Coinbase. I'd rather see it hit the 1.618. So that Coinbase trade played out perfectly. You guys want your short trade setups? You got it. Played out like 25% to the downside. Basically a 4-to-1 risk-reward ratio. Came back down perfectly to the red 236 or the orange 0.5 from the previous move right here. I basically told you I would expect to take profits around like that 271 range. But basically the target was 245. Hit that perfectly. Had a nice little bounce. Already recouped like 50% of the move back to the upside. So, but again, I'm not trying to like overly be bearish in the middle of like complete melt up in like a company that's specifically involved in like the crypto bubble. Not a good idea to short that, in my opinion. Like recklessly. If you're using options, it's different because you have like limited risk. But I don't want to just get like gap up, like liquidated. GameStop. Retesting the breakout red resistance right here. At the 200 exponential and simple. Guys, let's be real. This thing is running out of time. GameStop and AMC, these meme stocks are like dead. AMC broke down, put in a new low. This thing's done. It's about to go full on bear market. It entered into its bull market at like $4. It's when this got popular at $4, and it's about to go. That was our bull market entrance, and it's about to go into a bear market. So what does it do? It probably just gets absolutely decimated. I would full on expect AMC if it enters into a bear market. I would full on expect this at like $9 or $10 very quickly. As the majority of people, this has done nothing. We're back at May 2021 prices. So anybody that got into this basically like this year is about to go negative if we have any further price action to the downside. And like even, oh man, the people who got in like January 2021, this looks terrible. This thing's going to wreck a lot of people. Probably already has. You just don't hear about it. You don't hear about all the people that were late to the party that got cleaned out. Newegg, again, that was just temporary move. We captured it, and now it's straight back to Rec City. Looks like it's going back in the bear market. If this consolidates here long enough and looks like it's going to move to the upside, I will actually purchase some Newegg with the intention of like it being an investment. But let's keep in mind, this thing is trash. It's full on trash. I literally have bought stuff from them recently. But this topped out in 2010. It topped out again in 2014. And then it topped out again in 2021. And it's constantly putting in lower highs and lower lows. So, this is literally like, this is like XRP. Okay. No, it's not that bad. XRP is not this bad, technically. This is terrible. This is literally in, an 11-year downtrend of just lower highs and lower lows. This is literally the definition of Slinky Theory right here. You want to learn about Slinky Theory? Look at Newegg chart. It's garbage. Terrible. Terrible, terrible, terrible. Terrible. Bed Bath & Beyond. Not quite as bad, but still, again, just absolutely terrible. At least at some point in time, this thing was like profitable, but it topped out in 2013, put in a new low, put in a lower high. So what is it going to do? It's probably going to come back down here and put in a lower low. This looks terrible. Full on bear market on the monthly. Since this thing's been a bear market on the monthly since 2016. That was a retest and rejection of the 200 exponential. This was a reversion to the mean. And then what happens after the reversion of the mean? Continue of the predominant trend. And in this case, the predominant trend is bearish. So Bed Bath & Beyond it's going out of business. Let's be real here. Maybe not literally, but it probably is though, honestly. And last but not least, DraftKings. DraftKings. I think we had some supports. Yeah, okay. So we came down to our blue box perfectly. Got the measure move. Found support at the $29 level. So we really want to see this break above 35 and reclaim that previous support level. Otherwise, it looks likely it goes to like 18. This thing probably goes down to the teens. yeah, this chart looks terrible. Full on bear market on the daily. The weekly probably is still hanging on for now. I mean, that looks so bad. Let's see what this weekly close is like. If this closes a bullish, engulfing candle, if DraftKings closes above like 36.50, it's going to look like a bottom. We're going to get something like this and then continuation to the upside. So, and what was 36.50? Was that our resistance? Yeah, exactly. Oh, man, you got to just love technical analysis. I mean, if we close back above, basically right here, 36.50, reclaim the support and close right there, we'll get a bullish weekly engulfing candle and hard buy signal come out of the bearish control zone. And this thing probably just comes all the way back up to like $50. So that's like a 40% move from where we're at right now. So there is definitely a strong argument to be made that DraftKings could do some juicy stuff here. I mean, this is like what I would be looking at basically. I mean, realistically, I would want to see it. Where would I put my stop? I would want to just run like a tight stop with a daily close above 35.50 or whatever I said, 36.50, with the target to the upside of 47.77, a 35% gain potentially with the 8% stop, giving us like a 4.39 to 1. You could run a bigger stop if you wanted to, but I would rather just get back in, get stopped out, and then re-enter than just take a big hit on this. But yeah, there's potential there for that. So again, that's probably going to wrap it up for today, guys. I appreciate everybody for tuning in, especially the bots. I see you guys showing up in force today. So I'm not glad at all that you're here, you stupid bot fucks. But everybody else, I'm glad you're here. I appreciate you guys tuning in. Hopefully you enjoyed the stream today. Make sure you like and subscribe and tell your friends. Make your dog sit next to you on the couch while you watch this. Yep, all that good stuff. Appreciate everybody. Have a good week. Protect your profits. Protect your gains. Lock in some of those profits. Maybe even, realize some of those losses. Harvest them taxes or whatever. Remember, this is not financial advice. It's not tax advice. I'm not your financial advisor. I'm not your tax person. Not financial advice. Markets are extremely volatile. Please do your own research. Trade responsibly. It is Wednesday, 10:30 Eastern Standard Time on December 8th, 2021. And I think that's going to wrap it up for today, guys. Appreciate each and every one of you. Hopefully y'all been enjoying the technical analysis. I had a couple nice little moves here recently, but sort of lacking on some trade setups. Not a ton of stuff presenting itself right now, opportunity-wise. Some quick little scallops, some quick little like dead cat bounces. But more importantly, I think the one thing that's really jumping out at me for like the long term right now, after just kind of looking through it and walking through it and everything, is the potential in uranium for just massive increase over the next few years. So, maybe that's the one thing that you really are looking at for like, that retirement account game, popping a little uranium in there. I know I will be. But again, it's not financial advice. I'm not your financial advisor. Markets are extremely volatile. So please do your own research and trade responsibly. Everybody have a good night. Appreciate each and every one of you. Crypto trend trader. And I'm out of here.